a little more tricky because you have to figure out who is priced to perfection in that sense, and where the opportunity of earnings is higher than what the street is pricing in right now. I mean, if stock prices are full, then there's no opportunity to make money. So I think there's an opportunity for business and there's an opportunity to make money, and sometimes the two are not the same.
Okay, Ashwini, always a pleasure having you on with us. Thank you so much for joining in today. A market will always give you opportunities, so it's up to you to spot them. And of course, we're sitting here to help you do that day in and day out. Thank you once again for speaking with us. But a lot of stories that we're tracking this morning: high fuel prices and widening ATF cracks are forcing Air India to cut back international operations. Danish now joining in with exclusive details. Danish.
Well, that's correct. As per the data provided exclusively by OAG to NDTV Profit, we are seeing that Air India has massively reduced its international capacity. In fact, in April, Air India's international flights were reduced by 22%. And in the month of May, this capacity has been reduced by 20%. And even in the next month, it is expected that the capacity will get reduced by around 7 more percent. One of the major reasons is obviously the ATF and the widening crack. But besides this, if we look at it from a passenger's perspective, all major flights of Air India to North America, especially to the East Coast, they have been completely chalked off the board. And besides that, even the frequency to India to Vancouver flights, even they have been reduced. And if we look at how the cancellations are for the European routes, over there, it is kind of a mixed bag. Certain flights to big airports like London Gatwick and London Heathrow, the schedule over there is still as it was earlier. But if you look at the connections from other cities like Amritsar to Birmingham and other such places in the UK and other parts of Europe, those flights have majorly been reduced. So although if we see, because rising fuel prices, Air India is forced to reduce its international operations, and we wrote to Air India twice and we did not get any reply from them.
Okay, all right. Thanks so much, Danish, for bringing us those updates, the implications of the energy situation right now. All right, let's talk about an important update. And the cabinet, as you know, has cleared the ECLGS 5.0. This is essentially the credit guarantee scheme that targets 2.25 lakh crore rupees in fresh credit flow. Let's bring in Piyush, because he's spoken to a few people from the banking industry and he's got details of what this is going to mean for the banks as a whole and lenders as a whole. Piyush, what are you picking up?
Yeah, good morning, Alex. ECLGS 5.0 is being considered as a net positive for MSMEs. Bankers say with 100% guarantee on incremental loans to MSMEs, there is a likelihood that they will come out and lend more to MSMEs, especially those who are particularly hit by the West Asia conflict, export-oriented MSMEs into the oil, gas, pharma segments. And bankers also say that now with the 100% guarantee, in the last time this scheme was introduced was in COVID, and this time around they don't feel that a lot of NPAs will come out of these loans, and they also don't feel that very selectively the MSMEs will actually tap this particular scheme. We do understand there is some clarity that is required because, Alex, a lot of NBFCs give working capital loans, the term loans, not working capital loans. So the cabinet has informed that the current extension is being given to working capital. There is this limit, 20% limit of Q4. So it is important to understand whether this extension is also applying to term loans which are given by NBFCs, and there are a lot of NBFCs which particularly focus on MSMEs. For example, Ugrow Capital is there. A lot of HFCs also do MSME loans. So that is something we need to track and get some clarity on. Back to you, Alex.
All right. Piyush, thanks so much for that. So, a net positive, certainly for the MSME space, but there needs to be some clarity on whether this extends to term loans as well. Speaking of, we're more or less holding where we started off, 0.5% gains for the Nifty 50, but a few names have given up ground and the broader markets are holding, which is a good thing.
Okay, that's all the time we have on this edition of India Market Open. From all of us here and all of those who helped put the show together, thank you so much for watching. Stay tuned. Ask Profit up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me very shortly will be Mahima Bashirjani. And over the next hour or so, we'll try and solve all your stock-related queries. So if you haven't already, do start sending them on the numbers that are flashing on the top of your screen. You can also call us, talk to us directly, as well as our experts for the stock-related queries as well. But before we do that and a lot more, quickly take a quick check of how the markets are doing. It's a time where earnings seasons are taking precedence over stock reactions, and you're seeing that today impact on L&T as well. So quickly pull up the heat map for the Nifty 50, and stock was down 3% at the start of the trading session. The guidance under Lakshya 2031 is not giving any kind of enthusiasm to the street, and that continues to be down today as well. Missed margin estimates as well, and the volatile period, because the war impact continues to hamper L&T at this point of time. You're seeing some decent reactions coming in on Indigo as well as on Trent at this point of time. Indigo is up almost 3.5%, Trent's up 3.1%, and M&M is seeing a good reaction today post brokerages coming out with its ever positive rating yet again on this counter. They've also upped their new launches guidance as well yesterday. Bajaj Auto results come today, and buyback amount expected as well. Apart from that, you know, the other counter that will be in focus in the auto pack will be Hero. The conference call will start very shortly, so we'll start putting out those lines as well. But important quarter for Hero, results have been good. Commentary continues to be the other aspect to watch. In terms of sectoral heat map, also very quickly, if we can pull that up, Nifty Auto, rightly as I mentioned, for all those stocks and the reasons, is up biggest gainer today. So is the PSU banking index. FMCG is down today by 0.6%. It has had a good run over the last couple of weeks, but the advanced decline ratio is the other one. We've been consistently highlighting that market's been divided into two zones essentially. Second half has also had their share of reactions, and advanced decline also starting to show that trend. So currently up almost 2.5 to 3 times in terms of the advances versus the declines. And the mid and small cap also shows you that perspective at this point of time. So Midcap index up over 1%. Small cap continues to be in the green as well, is up by 0.7 odd % as of now. So the mid cap is dominating it. And finally, the BSE 500 before we start with the show. Embassy Developers up 20%. Coforge is up 7% after a strong set of numbers by the company. HFCL, Vodafone Idea, third straight day of up move. While on the loser side, you don't have too much of a reaction coming in. Only Credit Access Grameen and L&T as we highlighted. So it's a good positive screen today as of now. Let me welcome in, our guest as well as our, Avinash Gorakshankar, founder and head research at Avinash Mentor Services, and Vaishali Parekh, vice president technical research at PL Capital. Both of you, thanks so much for joining in. Let me just go across, and take the first query right now. This one's on Bajaj Finance, and actually Priyanka from Mumbai, who is sending across quite a few queries now and is a regular viewer, is holding 22,000 shares of this counter. She's holding them at 709 and asking a one-year view. Now, Avinash, she actually got in at quite a decent price and has amassed a very good, decent quantity as well. Would you recommend her to continue holding on to this counter at this point of time? Just in terms of portfolio positioning also is quite a big, but what's your view?
No, I think Puneet, you can definitely continue to hold on. See, I think numbers for Bajaj Finance have been very stable, and I think asset quality has also remained pretty, robust. I think the coming year should be a good year. In fact, from the conference call commentary and the numbers which were reported, I think very clearly, over the next 6 to 12 months, we believe that NBFCs like Bajaj Finance should do reasonably well. I think interest rates have also remained stable, plus consumption, post the GST cuts have actually helped, more demand move quite positively. So I think, over the next, say, 6 to 12 months, we could look at prices of around 1,050 to 1,100. Hopefully, once the market, sentiment also improves. But I think definitely the traction looks pretty positive, and we should expect better numbers for 26, 27.
Got that view, Avinash. But let's go across, take the next query now. And this one is coming in from Ramesh, who's from Chennai. Now, his question largely being a short-term outlook on Ramratna Wires. He's looking at the current share price, Vaishali, asking what could be a target to watch out for. What's your opinion? Very good morning to you.
Hi, very good morning to all of you. So Ramratna is already in a good upward trend. I think even with a short-term perspective, continue holding with 410 as stop loss. This is likely to do 480 levels. So the trend is very strong, one way upward rally. So I would say keep a stop loss and continue holding.
Got that view. But the next question coming in now is from Mulli from Bangalore. And his question is on travel food services. He's bought it at 1,270 rupees per share. Asking Avinash what should be his time frame for the next 12 to 18 months if he should continue holding. Would you recommend that?
Yeah, I think he should hold on. See, it's a very well-established business model where travel and food services operates in most of the airport, where most of the customers walk in. And I think it's a well-established, robust business model. So I think, despite the fact that valuations are not cheap, they're fair to expensive. I think it's a very unique business model, which is growing quite rapidly. So I would suggest that 12 to 18 months could be a good time frame where I think the investor could expect a decent risk reward. So continue to hold.
Right, well, let's pull up JNK Bank now because the counter continues to be in focus on the back of quarterly results. And to get just a very quick perspective, I'm being joined by Amitabh Chatterjee, the MD and CEO of JNK Bank. Mr. Chatterjee, very good morning to you. Thanks so much for joining in. Firstly, sir, congratulations on a decent set of numbers for Q4 as well as for FY26. I just want to get a perspective from you to start with on how has been this year itself in terms of your advances momentum, because we have, of course, seen it grow in this particular year, but your yield to advances has slightly come down to 8.98% versus around 9.56%. So I just want to understand if we could expect this is largely led by what we've seen in terms of the repo rate cuts by the RBI and expectation that can it be maintained at this 9% level?
Yeah, good morning and thank you very much. There are two factors, essentially. One is, of course, what you said because of the 125 bips of repo cuts. The other was, if you would remember, the state of the UT of JNK went through a very bad phase last year, right from the beginning of the financial year. What happened in Pahalgam and then later on the floods and flash floods and all. So because of that, there was quite a bit of impact on the retail business that we have, which constitutes almost 2/3 of our advances portfolio. So because of that, the high yield retail advances got impacted, which we compensated through the business in the rest of India. The rest of India retail business did well last year, but the volumes were not that high. We compensated the business by corporates, but you also know that corporates are quite competitive in rates. So combination of these two brought down the yields a bit, but now things being absolutely normalized here and the retail business picking up. So I'm very hopeful that we'll be able to improve the yields in the coming year.
Got it. And Mr. Chatterjee, very fair point on the concern that you highlighted. And at this point of time, you of course got the tax benefit in your yearly number of a growth of 13% profits. Largely, the other numbers you were able to maintain at least a flattish number compared to FY25. So is the expectation that FY27 Given that there's a good base now for FY26 numbers, you should expect a growth, and what could that look like? Because that will also have an impact on your NIMs as well, which fell this year compared to last year. Again, basis of what you said. So retail share, is it expected to pick up? What's the overall growth that you are looking at? Is a 10% number achievable? And will that translate into NIMs going back to FY25 level?
See, the guidance that we have given is 10% on deposits and 12% on advances. This is the same that we gave last year. But then you see that we have grown by almost 12% in deposits and 17% in advances. We wish to continue with the same. The guidance is slightly conservative considering whatever is happening in the world at the moment, the geopolitical situation. Being a little bit conservative is, I believe, is okay. But the internal targets are always to improve upon whatever guidance we give, except for the NIM. I think we have surpassed all the guidances that we had given last year. And NIM, of course, I told you the reason. So going forward, the retail will be the focus. Retail advances, we will continue. The pipeline in the corporate is good enough to cover for the entire year, right in the beginning of the year. So I do not have any issues related to covering the guidance on advances, but we want to do it in a better way through retail.
And Mr. Chatterjee, just as we wrap up this conversation because of paucity of time, just a quick question on what you're expecting, in terms of the other cost controls as well. Now, provisions you maintained, at a very low level this year. FY25, of course, was almost negative. And just in terms of a cost to income, has improved from 57% to 56%, but still a little higher than average for the public sector banks as well. So is the target in the medium term to go to that 52% mark, and any kind of initiatives that you're doing for that as of now?
See, if you look at the cost, essentially the major part of the cost is the staff cost that we have, and it has been coming down steadily. So the cost to income ratio, I believe, will be less than 50% very shortly. So if you look at this particular quarter, the cost to income was only 47%. Overall, for the year, it is 56%. So we are very hopeful that the cost will be contained, and major cost being the staff cost, it is already contained. It is coming down steadily every year through the more and more use of technology and lesser number of staff involvement, and staff being involved for businesses more. So I am very hopeful that both the costs coming down will continue, and the cost to income ratio will also improve.
Got it. Well, Mr. Chatterjee, a longer chat definitely warranted, but thanks so much for joining in, giving us time today to NDTV Profit, and giving us your perspective on the results as well as what's the expectation for next year. We look forward to our next conversation. But stocks down 2% today, but largely in the last 1 year, given also the challenges, stocks done well for investors, up over 42% in terms of returns. But let's get back to your stock-related queries as well. And Anjali from Hyderabad is patiently waiting by as a next caller. Anjali, very good morning to you. What's your query?
Yeah, very good morning to all of you, sir. Actually, I'm having Elecon Medical Corporation. So I'm having 550 average of 600 shares.
Okay.
Okay, so what is a short-term or long-term view on this? Shall I hold, or is it?
So you saw the charts, Anjali, when you bought into this counter, or was it a fundamental?
Yeah.
Okay, you saw the charts.
Now back, like almost 8 months to 10 months back, I bought this. Sir.
Got it. Well, Vaishali, let me come to you then on Indraprastha Medical Corporation. She's been holding on for the last 8 months, currently sitting on a loss. Would you recommend her to averaging down or exiting the position or continuing to hold?
No, I would not ask to average right now, but well, I think it is on a recovery mode. So I would say keep a stop loss of 390. And right now it is at a minor resistance of a small moving average. Once you see the stock moving above 415, this can give you a target of 460. The actual strength actually lies only above 460 level. So till then, we will just call it a bounce back and a range of 390 to 460.
Well, hopefully, Anjali, that answers the question. But Avinash, just before we move forward, you heard the management of JNK Bank, and it's been one of the counters that actually done well in the last 1 year, given the correction that we saw at the start of 2025. Do you have an opinion on the counter? What should investors do with it now?
No, I think, the management commentary appears to be very positive. And I think there are valid reasons why earlier the bank's performance was impacted. But I think going forward in FY27, Puneet, I think the bank is on a very strong wicket. I think in terms of asset quality, in terms of disbursements, in terms of the overall growth opportunity, I think despite the fact that, large and a majority portion of its revenue comes from only one state, the balance sheet is managed very well. So our sense is that around 130, 31, one could definitely look at it from a year's perspective. I think one could definitely expect a decent risk reward. But clearly, I think the first quarter of FY26-27 will be the near-term trigger. Markets are expecting that possibly, after this quarter comes in, there will be some surety about the earnings growth, which we believe could be at least 15 to 16%. So definitely a good buy, but from a slightly medium-term angle.
A fair point, and got that view of Avinash. Next question coming in on SBI cards now. Vaishali, Gunsekharan from Tamil Nadu wants to know if it's a good time to buy for the short term. What do the charts say?
You're talking about SBI cards, right?
Yes, that's right.
Just a minute. So currently, I think it can be bought. 620 as stop loss and look for a target of 680.
680. Got that view. But viewers, you can also call us for your stock-related queries at this point of time. We, as well as our experts, will try to get you a perspective on your stock-related queries as well. The number is flashing on the top of the screen. That's the landline number. And let's actually go to Vijayawada now. And Bindu actually has a stock query for us. Bindu, very good morning to you. What's your query?
Very good morning. I'm holding 50 shares of Safari Industries.
Okay.
At 1510.
Okay.
The stock has dipped a lot
for
a few months.
And is this a long-term bet, Bindu, or a short-term one?
I can hold it about like 6 to 8 months.
Okay. 6 to 8 months. Got it. Well, Vaishali, let me come back to you then. Limited time frame, but Safari Industries, what's your opinion on the counter now? Should Bindu wait by, and can she see her buying price yet again of 1510?
So I would say that the stock seems to be too beaten down, but quite in an oversold zone. So I think you can average it out and wait for a bounce. Don't be in a hurry to exit. I think the stock should recover and come towards 1500 to 1600 levels.
Got it. Well, the next question, coming now on Eternal, and our viewer holds 438 shares at 228. Now, wants a long-term view on this particular counter. So, Avinash, what's your opinion on this one for Birandeep? Because, I wouldn't say beaten down, but has corrected from the highs and is at a very interesting juncture now for investors who want to buy into it, might have missed the previous rally. How did you view the Q4 results? It's a continuation essentially of opening out much more stores in dark stores, continuing that food delivery model. What's your opinion?
No, I think, Puneet, from a broader perspective, I think the company has done well. Fourth quarter numbers were much better in terms of profitability margins. And I think Blinkit has been a very strong performer. I think clearly, the market opportunity when they launched Blinkit was not anticipated. But today, I think Blinkit is growing by leaps and bounds. And going forward, maybe in the next 1 or 2 years, I think you could see a bigger market opportunity being tapped by Eternal. So, in the short term, the stock will remain volatile. I think after the results, the stock has seen a fresh wave of selling. But fundamentally, I think the business model has emerged stronger. And I think now, with a annuity kind of business model, at least the next 2 years, hopefully, if demand continues to be strong and the kind of, volume growth we see in the Blinkit division, I would not be surprised that a significant amount of, upside is possible. But I think you need to keep a time frame of at least 12 to 18 months. Maybe on a quarter-to-quarter basis, it's not possible to, make a significant amount of alpha. But the next 2 years are going to be very promising for the company.
Right, and thanks for the detailed opinion, Avinash. Hopefully, our investors are benefited from that. So is our viewer, but and hopefully, Birandeep, that answers your question. But another caller from Hyderabad, Anjali, has a stock query for us. Anjali, good morning. Welcome to the show. What's your query?
Good morning. I'm holding Elecon Engineering from long time, maybe from 1 year.
Okay.
So I'm holding 53 shares at the rate of 558. The stock was down from almost after I bought. So now it recovered and now the price is the same as what I bought. So is it good time to sell or should I wait for more upside?
Got it. And very fair question. Avinash, from the January low, stocks up almost 50%. I think it hit a low of almost 360 odd levels. Any view on Elecon engineering? Should Anjali exit or continue to hold?
No, see, I think there were a lot of exceptionals, in the fourth quarter numbers. And I think if you strip off those numbers, then the performance has been pretty decent. And I think the management, outlook in the commentary was also quite positive. In fact, the management has said that, orders for some time had been postponed because of some midterm kind of, correction which happened in their marketing process. But I think now orders are trickling in. Hopefully, the first quarter for this financial year is going to be quite better. And just to add, there are a lot of ultra HNI investors like Vijay Kedia who already has a very significant position here. So my sense is that, despite the fact that the stock has not performed for the investor, keep a view of at least 12 to 15 months. I think in this space, Elecon has a very strong, dominant market presence. And I think a good amount of risk upside, risk reward is very much possible. So continue to hold and keep the conviction for the next 12 to 15 months.
Got that view, but let's go across, just quickly address the F&O setup for today, and largely the Sensex continues to be in an up move. We've highlighted that L&T is one of those key stocks that's taking the brunt today. So is HUL, while Indigo continues to power through at this point of time. But individual stock specific action is also very interesting. You're seeing longs being built up on Coforge and SRF. Coforge, of course, on the back of earnings. SRF had a couple of key updates. Markets taking the one was a good one was a negative one. I think the market clearly telling you which one it likes better. But in terms of shorts being built up, L&T is one of the bearers, unfortunately, at this point of time. So is United Spirits. But longs now being unwinded on Hitachi Energy after a strong up move from almost 22,000 or to 33,000 stocks carried through. Seeing some build up of, essentially seeing some unwinding of longs that were built in the system, and shorts being covered on Force Motors. They've launched new Traveler and markets liking that aspect. Also on Indigo. So those are some of the key highlights and some key counters that are buzzing in trade today. But the next question is actually coming in from Arnav, actually from Delhi, and his question is on Hero MotoCorp, bought at 5043. Avinash, before I come to you, just let me address the flashes on the bottom of your screen, because of course the results were quite positive, over a 20% growth, and now the con call is now on as we speak. It started at 10:30. Margin guidance is something the company has maintained at that 14 to 16% level, because they expect that the capex will continue in Euler Motors, in the two-wheeler side as well, for VIDA product development as well, and they've committed almost 1,500 crores at this point of time as well in terms of capex for the next year. Now, 14 to 16%, a bit, and actually it's quite in that range for the last 3 to 4 years, given the new ventures have taken precedence. They're planning big capacity expansion in EVs, so you would expect a lot of those 1,500 crores to go into the VIDA capacity, and it has performed phenomenally well at this point of time. Sales have grown almost 7 to 8x of the FY25 level. But just some important flashes, they are looking to launch, of course, new commuters, high displacement bikes, but the 125cc space continues to be one which is dominated by Bajaj, which will also come with earnings. The entry level continues to be an important one for Hero MotoCorp. So some more commentary on margins will be something to watch. Price hikes have been taken in a calibrated manner in April. But Avinash, how do you view the stock now? Because we've started to see a fresh up move on players like TVS, market rewarding players like Ather as well. And I think we have questions, so we'll take that in just a bit. But what's your view on Hero? What do you recommend for Arnav to do at 5043?
No, I think he should continue to hold. I think, as you rightly mentioned, if the margin trajectory has been maintained at 14 to 16%, it's good, because typically, commodity prices have gone up, and despite that, the management is pretty confident of maintaining its margins. And I think volume growth is going to be the key driver. I think the demand for two-wheelers after a long time has picked up. Hero Motor has got a large presence in the rural markets. Most importantly, it's a free cash flow generating, company. So capex of 1,500 crores is not going to be a problem. They will fund it entirely from their cash accruals. And I think the market should obviously look at new product launches. I think apart from adding on to their electric vehicle product bouquet, new products, in the IC segment also are important. And that is where I think markets would look at it. But net, I think the next 12 to 15 months look pretty positive. So I won't be surprised the stock will move up steadily. Maybe, after the results, the stock may see some corrective action. But fundamentally, the company is on a strong wicket. So we would prefer that wait for the next 12 to 15 months. You should get a decent risk reward.
Got that view of Avinash, but viewers as well as Avinash and Vaishali, time now for the rapid fire round in this edition of Ask Profit. You both know the drill. The first question coming in on Tata Tech. Now, Mahi holds shares at 727. Avinash, yesterday's earnings were quite positively surprising in that sense as well for Q4. Should she average down since he's holding at 727?
Yeah, I think keep a time frame of at least time frame of 12 to 15 months, and you can average at the current level.
Honasa Consumer is the other one. Srinivasa Rao is holding 100 shares at the level of 4110. Wants to know whether to continue to hold or sell. Vaishali, your view on the charts?
So Honasa, I think continue holding for a target of around, I think, 370.
Mahesh from Andhra Pradesh is holding on to a Moisture Vaishali. He's holding shares at 218 and holding 264 of them. Should he continue to do that?
Keep a stop loss of 195. Once it crosses 210, the next target would be 220.
Inox Wind, 5,000 shares bought at the levels of 110. Continue to hold, exit from long-term view. Avinash?
No, I think continue to hold.
The next one coming in is on IKO Energy for the short-term perspective. Vaishali, is the question Sneha is asking, is it a good time to enter IKO, IKIO?
Sorry, not tracking this.
Okay, the next one is on Vari Energies. Our viewer is bought at the levels of 3240. What should be the target price going forward? Vaishali, on the charts, continue to hold, sell?
Continue holding. Look for a target of, keep a stop loss of 3100 and look for a target of 3500.
Shiv Kumar from Bengaluru is holding on to TCS, Infosys as well as Coforge. Avinash, should he continue to hold on all three of them or be selective now?
No, I think TCS and Coforge he can continue to hold. I think Coforge has pleasantly surprised the markets and the stock is up. So I think continue to hold TCS and Coforge.
Okay, CG Power, what should be the entry price considering the rally that we've seen in this counter? Vaishali, your view on the charts?
So currently it is 821. I think 800 would be 790, 800 would be an ideal level.
Padma Kumar is holding on to 13 shares of Maruti at 14,850. So he's currently sitting on a loss. Asking if he should shift to Voltamp, ABB or Siemens. Avinash, if you can address both those, should he actually shift out of Maruti into Voltamp? I know the stock was down 20% yesterday.
No, I think my guess is that in Maruti, I think, we should hold on. I don't think, markets would further drag it downwards. I think in the Voltamp, numbers have not been great. So continue to hold Maruti for the next 6 to 12 months. He can average even at the current levels.
Okay. Cochin Shipyard bought at the levels of 2498, down already 30%. What should be the next course of action for Dinesh? Vaishali, your view on the charts?
I think average out at these levels and wait for it to bounce because it's already in a trend.
Got the next question coming in, from Pawan from Bangalore. He's holding on to Patel Engineering at 38. Vaishali, he's holding on to 1,000 shares. Should he continue to do so? Currently sitting on a loss.
I think it's showing signs of revival. So I think average out at these levels and look for a target of 32. So this way you can lower your cost.
Got it. Well, that is the end of the first round of rapid fire in this edition of Fast Profit. But Avinash, Vaishali, stay on. Lot more stock-related queries on the other side after this very short break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
You're watching NDTV Profit. I'm Mahima Vachharjani, and the stock we're putting spotlight on today is United Breweries, in focus on the back of its Q4 numbers. To discuss as to how the quarter has gone by and how things are shaping up for FY27, we're joined by Vivek Gupta, the MD and CEO of United Breweries, joining us now. Vivek, first of all, thank you so much for taking out the time. Despite of Q4 being a challenging one, you've managed to grow your volumes at that 4.11%, which is much ahead of what the street was, the analysts were expecting, right? Just want to understand as to how much of this is, a structural change versus, what you've been doing so far.
I think, you have absolutely picked up right. We are quite buoyant on what happened in the Q1. I think, you have absolutely picked up right. We are quite buoyant on what happened in the Q1 on the category growth recovery. In the Q1, the category grew double-digit on volume growth. As UBL, we grew 4% on primary sales and almost 8% on secondary sales. So we reduced some inventories. But the good part is the category is back on growth and high single-digit growth. If you remember, the last 6 months of the second half of 2025 were tough for the category because of weather, rains, as well as, the affordability issues. I believe the amount of work which Brewers Association of India and which as a UBL we have done with many governments to talk about the affordability of beer has really worked. In the last 6 months, the number of states who have made positive intervention to reduce differential tax on beer and spirits is one of the factors why beer category is back on growth. The second big factor is the innovation. As we talked, we launched our blockbuster innovation of Kingfisher Smooth. The third factor is the premiumization. I'm also glad that this quarter we grew 16% on premium. For our fiscal year 2025, our premium growth is 21%. There was one quarter which was OND, October, November, December, where premium growth was almost flat. So I think the category is back on growth. At the same time, it has been a tough quarter because the West Asia war has disproportionately impacted the beer industry and UBL. Our cost of sales, as I mentioned, has disproportionately got impacted. Our exports in profitable market because Kingfisher is iconic brand for India and especially for India's outside India. And that has got impacted. The Indian rupee has become weaker. So despite all these challenges, and as a company, we are preparing for long run, we continue to invest in category growth. So I feel that the most important thing this quarter is category is back on growth. The premiumization story is back. We are getting very good support from regulators to reduce the differentiation of beer taxes, which is most structural. But at the same time, we have to prepare as a company to really manage this macro situation, which is not in our control. So there's a lot of action we are doing internally to mitigate the impact.
Got it. So Vivek, in terms of this entire impact of West Asia conflict, right, it's going to be on your raw material, somewhere in supply chain as well. Just want to understand as to considering the escalation in cost as a percentage, how much of a price hikes are you expecting going forward in Q1 FY27, and if that will follow through in Q2 as well? Just want to get that sense as to what is the percentage of increase in cost and what is going to be the percentage of increase of price hikes that you're going to take?
Yeah, I think our estimate is the total impact is around 400 to 500 crore on our cost, which is almost 10 to 15% depending on this. This business is state by state business because every state has their excise policies. Some states, you can take pricing. In other states, you have to work with the regulators. We almost have 30% of our business where UBL has a very strong share. Our brands is very strong, and we still need to continuously work with the government to get the pricing. So Telangana, Andhra, Tamil Nadu are the three states where we have big business, a brand that's very popular, but we need to do more work with regulators to take the pricing. Because unlike other industries, we cannot just go and pass on the pricing to consumer. The second is affordability on beer is extremely important. So we don't want to create a problem for the category growth, because where we just pass on the pricing to consumer, I think we need to do more work with the regulators, because every 100 rupees which consumer pay on beer, 70 goes to the government. So I think that is where they have to reduce the taxation so that affordability for consumer is maintained and the category growth continues to happen. So we'll be doing a lot of work on that. The third area is we need to have our own cost and productivity program. So we are questioning every single cost. We are doing a lot of work in making sure that we are more disciplined as an organization and we are more efficient and more productive. So it is a big challenge, but it needs a big, unique intervention by some of the state governments. And I'm also, through this channel also, I would communicate that states like Telangana, Andhra, Tamil Nadu needs to really help industry so that, we can have a much more sustainable business and growth.
Well, that was the management of United Breweries post their quarterly results. As Mahima highlighted some of the key aspects to watch, but stocks taking a beating today, at least down 3.7%. But go across, take the next question from Akash on ICICI AMC, and his query largely being a medium-term one. He's bought into very close to the IPO price at 2165. I think it was the IPO price, and wants to hold for the next 2 years, Avinash. And the question largely being from him, is this the right levels to buy a little bit more after the 50% run? What would you recommend?
No, I think, ICICI AMC should definitely do well. I think it's a very strong annuity-based business model. But I think, since it's moved up by almost 50%, I would say that, it's better that he buys it in a staggered manner. Look at some dips if you get and accumulate the position slowly. Maybe do a small SIP kind of approach and then gradually accumulate it and stay invested for the next 2 years.
Okay, all right. We've got Yamini calling us from Chennai. Yamini, a very good morning to you. What's your query about?
Good morning, Mahima. My query is regarding Tata Power. I have 10 shares of Tata Power at 413 rupees. And I'm looking to accumulate it at the current levels, and I have a long-term perspective. And is it also advisable to take an SIP on the same?
Okay, all right. Got your question. I'll take this up with Avinash. Then Avinash, your view on Tata Power from a long-term perspective and whether SIP doing this counter makes sense.
Yeah, I think, power generation continues to be a very strong, sector where a lot of interest is coming in. And I think, looking at the kind of strong demand, from the data center opportunity, typically, this summer has also been very hot. So I think, you're going to see a lot of power demand coming up. In case of Tata Power, I think it's better that the investor takes at least a 2-year view and gradually, starts an SIP, because clearly over the next 2 years, the renewable space is also going to be a very big opportunity for Tata Power. So I think, rather than buying everything in one shot, it's better that you buy it in a staggered manner in small pieces and then stay invested for the next, say, 2 to 3 years.
Got that view, Avinash. But next question now coming in. Now, Vaishali, this one's for you. It's from Anil Singh asking if it's the right time to enter Aether Energy. Now, stock's been in an up move up over almost 200%, 2x in that sense from its buying price. And yesterday was up on the back of results. Today, almost down 4%. Would you recommend that, Vaishali?
Yeah, I would say ideal level would be around 800. It can consolidate. We can see some profit booking. So I would say accumulate between 880 to 800 levels.
Okay, the next one that we have is from Rajesh Maheshwari, who's writing us from Indore, asking about Globus Spirits. He's got 70-odd shares at an average price of 1019. He says, what could be the prudent course of action for this stock from a short-term perspective? Is there more steam left, is his question. Vaishali, he's not very far away from where the buying price is. Slightly a downtick is what he's seeing. But do you think it can bounce back to his buying price and maybe give him some profits in the short term?
So I would say the stock has given a one-way rally right from 800 to 1150. So it can consolidate and we can see some profit booking coming to 1000 levels. So as long as 1000 level is held on, I think the stock is pretty strong and we can see a further strength going up to 1250. So depending on this levels, one should take a call. If you want to book your profit right now, you may do so because little bit of profit booking cannot be ruled out.
Got it, Vaishali. But the next counter is on Tarsin's product. It's a very small counter. But Avinash, just trying my luck here because Deepak is holding on to 354 shares, bought at 350, and he's in a loss of almost 35% right now. What would you recommend, Avinash? Because I know you track a lot of smaller companies as well. It's been a rank underperformer, down almost 70% from when it listed back in 2021 or 2. Any view here?
No, I think, see, in the short term, I don't think there are going to be any major triggers. The investor has purchased the stock at a slightly, elevated level. So I would say that, if he wants, he can switch over because I feel that within the banking space, stocks like Federal Bank or typically a Bank of Maharashtra would give him a better alpha. As you rightly mentioned, the stock has underperformed significantly. And in such kind of cases, it takes at least a couple of quarters or sometimes even more to, recover. So my sense is, something like a Bank of Maharashtra or maybe a Federal Bank would be a better choice because year growth is clearly evident. And I think the next 6 to 12 months could be better. So I think a switch would be better, but definitely this company is unlikely to recover in the short term, very big way.
Okay. All right. We've got Muin calling us from Bengaluru. Muin, a very good morning to you. What's your query about?
Good morning to you all. Yeah, I have Greenfly, 808 quantity at 291.22. I bought it at a higher price. I want to know if this counter will reach the buying price within a month or two.
Okay, got your question. I'll take this up with Vaishali then. Vaishali, in a month or two, do you think this can bounce back to 291 levels?
Well, then I would say keep a stop loss of 240. This stock has to once again go towards 280 and sustain about that. So if that is the case, then it would go to 300, 320. So stop loss of 240 and continue holding.
Got that to view, but stocks done well actually in the 3-month perspective. But as Vaishali, I say 280 for Greenfly at this point of time. Sunny Sharma from Kolkata is asking in this question, and it's a very topical one on L&T. Now he's bought 50 shares at almost 4,000 rupees, so bought it post the correction. Now, Avinash, how did you see the results? I think largely some disappointment on margins, on the guidance till 2031 as well. Any opinion here? Because it's one which a lot of investors actually hold on to, right? What would you recommend to someone who's already holding as well as to Sunny?
No, I think, see, these numbers were on expected lines, Puneet. And I think maybe the next quarter also will be challenging. But hopefully, if the geopolitical situation improves and I think things get back to normal, then I think L&T definitely should do business back to normal. And I think clearly in terms of the opportunity, L&T has got several pockets of opportunity like capital goods, infra, defense. So I would say that, the investor should hold on, keep some time invested here and have the conviction. The management has the potential to bounce back. And I think better numbers could come in post-September. So I think till that time, the stock may be a market performer, but longer term, we continue to be positive.
The next one is on Juniper Hotels. Our viewer Nagraj from Hyderabad is holding 40 shares, bought at the levels of 360. He says he's sitting on a loss of around 6,000 odd rupees. Wants to know if he can continue to hold from a long-term perspective or book losses. Avinash, any view on Juniper Hotels?
No, I think here my sense is if the investor has a couple of years in mind, then I think he should average and stay invested. It's a good business model. The promoters have the right bandwidth, but I think, the investor has purchased the stock at a slightly elevated level. So unless, the investor spends a considerable amount of time here, only then the risk reward would come in. So I think, rather than booking a loss, increase the time frame, and I think average at the current level, you will definitely be rewarded over the longer term.
Well, speaking of rewards, Avinash, I'm hearing that it's your birthday today, so just wanted to wish you a very happy birthday. You've been a key supporter of NDTV Profit over the last few years that we've been on air, and of course, to Ask Profit most certainly. So just wanted to wish you a happy birthday. And I think Mahima would say the same.
Yeah, I think Avinash, a very happy birthday to you and wishing you good health and happiness always. I think this is from the entire NDTV Profit family to you.
Yeah, thank you.
All right, okay. We've got our next caller. I think Jagan is calling us from Visakhapatnam. Jagan, a very good morning to you. What's your query about?
Good morning. I'm actually looking for Lemon Tree for the short sale, and I have 12,000 stocks of Lemon Tree.
Okay.
At 118.20.
Okay, interesting. All right, I'll take this up with Vaishali. Then Vaishali is already sitting on profits of 37,000 rupees because of the huge quantity that it's got. It's around 12,000 shares. From a short-term perspective, continue to hold. Looking at the charts.
Well, first of all, happy birthday to Avinash from my side too. And talking about Lemon Tree, I would say keep a range of 115 to 130. That is the range for a short-term perspective.
Got that view. The next question coming in now, it's from Murli from Kerala. He's holding 150 shares of Zentech at almost 1,800, and results were weak yesterday. Reported stock was also down. Let's look at the 5-day chart to get the perspective to our viewers as well. Asking what's the future now, Avinash? Disappointing results, and your stock's taken a beating post that. And there were some concerns, right, of order book being built up only for just a couple of quarters as well. So limited visibility there. What's your view?
No, I think, see, Puneet, in companies like Zen Technologies, you can't take a quarter-on-quarter view. I think in the past also we have seen, some very bad quarters and then the company bouncing back. I feel that, in a company like Zen Technologies at this level, if you don't have at least a 18 to 24 month view, you will not be able to ride the entire value creation journey. So I think, the company continues to do well. The management is quite strong and its domain expertise is there. The defense opportunity is also very large. So I would say that, in the short term, the stock will struggle because these numbers are definitely not exciting. The markets were expecting better numbers. So I think take a longer term view. And I think if you want to have this share, then I think unless you have a perspective of 12 to 18 months, it's not possible for you to make money. So stay invested, but keep the long story, intact. I think short term, the stock will struggle.
Okay, the next one that we have is from a short-term perspective. Sunita from Delhi is asking whether M&M or Lupin, which one has a better return potential for the next 3 odd months? She's looking at a 10% gains. Wants to know the stop loss and target price as well as the entry price for one of these which is looking better. Vaishali, your view on whether to buy Lupin or M&M for the next 3 months?
So I would say M&M would be a good buy at these levels because it's seen a good corrective move. And if you're looking at 2 to 3 months, then 3,100 should be the support, and perhaps 3,550 could be the next target. Lupin is in a positive territory, but we've seen already a good run up. So I would take M&M as a favorable risk reward stock.
Got that view, but the next question coming in now, Vaishali, again, just a short-term view that you have on Kotak Mahindra Bank as well. The results didn't enthuse the street too much, but what's your opinion on the stock now?
Well, nothing much has been happening, but purely on technical terms, 350 is the support. And if there is some momentum coming in, 385 would be the first target, 395 would be the next target.
The next one is on Good Luck India. Sachin says that he's seen a recent breakout on the charts for this one. What's the short-term outlook, the target price and stop loss? Vaishali, on the charts?
So Good Luck, yes, as rightfully noticed, it has given a breakout about 1350 levels. Continue holding. Next target would be 1450 to 1480.
Hopefully for our viewer, Sachin got that view, Vaishali, and hopefully for our viewer, Sachin, this stock does bring some good luck to him as well. I'm just stealing your thunder at this point in time. But Murthy from Vizag actually has another question on Hyundai Motors right now. Asking if it's a good time to enter. Avinash, results on 8th and street's not expecting too much yet again, and it's very close to that IPO price as well. What's your preferred pick actually in the auto pack? Because we're seeing leadership now largely being defined, right? Clear winners there. What's your opinion on Hyundai?
No, I think numbers are unlikely to be, very strong. I think markets now expecting a very strong volume growth number, but that has not come in. So I think, we'll like to wait for the management commentary as to what kind of product launches, what kind of, volume growth expectations the company has got. But I think within the auto space, Puneet, Mahindra and Mahindra, looks very strong. I think yesterday the numbers had come in 18,000 crore PAT, and I think very strong commentary. I think margins could be a little bit down, but I think overall the volume growth is expected to be very strong. So here around levels of 34.50, 34.75 very much look possible over the next say 6 to 12 months.
Okay, we've got Aruna who's calling us from Vijayawada. Aruna, a very good morning to you. I believe you have a question on Voltam.
Yes, ma'am. Very good morning to all of you, ma'am. Thanks for taking my query. So, yeah, what's the entry price for Old TAM, both short-term and long-term?
So, Aruna, while you were analyzing this counter, did you see the charts or did you see the fundamentals of the company?
Charts only I have seen, ma'am.
Okay, all right. Then I'll take this up with Vaishali. Vaishali, Voltam transformers, what are the charts indicating? Is this the right time to enter?
Well, the going was pretty good till yesterday's results, but I think near-term support is 9,500. So, if your time is not your problem, then I think continue holding 9,500, 9,300. These are the levels to add more, because once we see some stability and new round of momentum setting in, this can retest the previous high and perhaps go higher.
Got it. Well, the next question is an interesting one, from our viewer, and it's from Prashant. He wants to know on Polycab or on Sterlite Tech, Avinash, if either of those counters look good to enter at this point of time, both trading at all-time high, but ROC as well as the ROE is very strong is his question. Any preference here?
I think within the wire and cable space, Puneet, Polycab definitely is a much better choice. I think, of course, Sterlite Technologies is also expected to do well because demand for optic fibers has gone up. Considering the kind of investments which are coming in the data center opportunity. But I think Polycab, we have the conference call today at around 4 o'clock. My sense is the numbers and the outlook commentary going forward will be very critical. But Polycab, if somebody were to accumulate maybe in a small, a staggered manner, in the next, say, 12 to 18 months, I think the growth momentum will continue. So Polycab can be a better choice. Stay invested for the next 12 to 18 months.
The next one is on Bellrise Industries. Gary is asking whether this is the right time to enter the counter from a 6 months perspective. Vaishali, would you recommend that?
Well, actually, the stock is already risen very high, but having said that, it still doesn't show any exhaustion. So I would say keep a range of 205, and this can go towards 230 to 250 levels in times to come.
Got that view, Vaishali. The next question coming in now. This one's, on a smaller stock here, Jyoti Resins, and a viewer, Sundar, has bought it at 1,700. Now, stock's currently trading at 839. Just trying my luck here, Avinash, do you track this by any chance?
Puneet, if you could please tell me the name again.
Yeah, Jyoti Resins is the counter. Jyoti Resins and Adhesives, yeah.
See, this is a company which is a smaller comparison of Pidilite. They are into industrial adhesives. And I think the company has done remarkably well. So I think, going forward in the longer term, the market opportunity and the pool size is very large, which I think, Jyoti Resin has frankly, demonstrated its, growth potential very well. So I think taking the next 12 to 15 months, yes, I think it's a good bet to, bet in the adhesive space, because if you look at Pidilite and if you look at Jyoti Resins is a much smaller player, but profitability is quite attractive. And I think the opportunity is large. So here, definitely, if you have a medium-term view, you should stay invested.
Got that view, and thanks so much for that, Avinash. The next question, and viewers, it's now time for the rapid fire round, the second edition in this edition of Ask Profit. Let me go across, take the first query. Now, this one's from Ramya from Chennai, and wants to know between Oswal Pumps or Max Health. Very different counters, Avinash. There's different sectors too, but what's a better one-year pick from here on?
I think I would prefer Max Health. I think, that is a promising opportunity in the hospital space. That would be a better choice.
Okay, the next one is on MTAR Tech. Is this the right price to buy for the next 3 months, Vaishali?
Well, MTAR Tech already gone quite high. So I would say keep a stop loss of 6,000 and look for 6,600.
Got it. The next question coming in now, it's between Bajaj Housing, GMR Airports. What's a better pick for the long term, Avinash?
I think my guess is GMR Airports is a very unique opportunity. I think if you have the next, say, 12, 18 months in mind, this is a good price to accumulate.
Crompton Greaves at the current rate, buying makes sense from a long term perspective, Avinash?
Yeah, I think my sense is if you have a 12 to 18 month time frame, you can gradually accumulate.
Got Trent bought at almost 5,000 rupees by Harsha from Vijayawada. She's holding 50 shares. What's the view here, Vaishali?
You can average it out. It's corrected quite a bit. It is at a good support level. You can average it out.
Okay, Transray Lighting bought at the levels of 580. What's the 1 year outlook for this one, Avinash?
I think outlook is pretty positive. The stock has been hammered from its high, but I think numbers have been pretty strong. So I think continue to hold.
KPIT Tech bought by Sunil at 728. Avinash's question being what he should do for the long term. Would you recommend him to exit since since he's in profits right now?
No, I think if he's got a short-term view, Puneet, he can exit. But otherwise, I think it operates in the automotive and basically in the US American market. So I think very strong clientele. So obviously, if he's got a short-term view, he should exit.
Okay, 268 shares of JK Tyre bought at the levels of 606. Hold or sell? Vaishali on the charts.
Hold.
The next one coming in is on Union Bank, bought at 164, and the question, Vaishali, is what's a good price to sell it?
I think quite correct. So I would say sell at around 170.
Okay, the next one is an interesting one. Ashish from Delhi is saying ITC Cup chalega. He's got 500 shares at the levels of 400. Avinash, your view from a long-term perspective?
I think here you need to give in a slightly longer period. I think ITC is a steady compounder. Yes. I think definitely at these levels there's nothing to lose. So I mean you have to possibly give say 12 to 18 months and continue to hold.
Continue to hold. Got well. Continue to eat bingo chips at least in that time, and probably the other product if you're interested. But Mahalakshmi from Hyderabad is holding on to ABB at 5580. Avinash, so she's a senior citizen holding 78 shares. Can she hold on for another year?
Yeah, I think she can hold on. I think growth momentum will come in. I think because this is a stock which is largely dependent on how the macro economy performs. So very strong MNC parent, continue to hold.
Okay, the next one is on Hindustan Zinc. Is this the right time to purchase from a short-term perspective, Vaishali?
Yes.
Uday is holding on to GPT Healthcare, which he bought at the IPO price. I can't remember the IPO price for this one, Avinash, but you have an opinion on the stock?
Yeah, I think it's a newly listed hospital company, and I think if you can hold on for the next say 12 to 15 months, I think has been done remarkably well. But I think it's a small hospital, so I think it will take some time to get related.
Okay, HAL 700 shares bought at the levels of 4659. Siva wants to know a medium-term view on this one. Avinash?
No, I think continue to hold. I think it should continue to grow rapidly over the next 2 years.
Final query for today. Srinivas from Hyderabad wants to buy into Force Motors. Avinash, do you have a view here? New model launch as well yesterday.
I think wait for the Q1 numbers. I think probably after that it's better to buy fresh.
Q4 or Q1, Avinash?
Q1, sorry.
Q1.
Q1 of FY27.
27. Okay, so you have to wait for a couple of quarters. Got it. Well, Avinash as well as Vaishali, thanks so much for joining in, helping us solve 54 queries. Avinash, hopefully you have a good evening as well, but thanks so much for joining in. Viewers, that's all the time on this edition of the show. KYC comes up next, but we'll also start taking all your stock-related queries at 2 p.m. on Ask Profit, the afternoon edition.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Hello and welcome to Know Your Company. I am Mahima Vajrajani and we are going to take up a very interesting company today that we are going to try to decode in this episode of Know Your Company. The company that I'm talking about is Aadhaar Housing Finance. Now, of course, it did come out with its Q4 numbers, but we're going to we're going to do a deep dive analysis of how this housing financer is doing. Basically, as a housing financer, a mortgage-related loan products, is its forte in terms of the loans. Basically it is for residential property purchases and construction. A lot of its loan book is from the salaried segment as well. Home improvement and extension loans is also something that the company provides. Loan is also they also provide loans for commercial property construction and acquisition as well. So these are the different segments of the loans that they give. Focused on low-income housing segments, the ticket size largely is around that 10 to 11 lakhs. In terms of the loan book, 100% secured retail loan book is what they have. And this is of course the brief about the company. In terms of product mix, around 27% is LAP and around 73% of their loan book is retail home loan. So that is the big chunk of their entire loan book. In terms of how the geography and reach is, around 22 states is where the company has its presence, and it's got a vast expansion when it comes to branches. Around 626 branches is what the reach looks like overall. So this is the overall view of what the company does, how is the reach, how is the geography as well. Now in terms of the parameters that we're going to talk about when it comes to Aadhaar Housing Finance and as to how we are going to rate the company, let's take a look at those 8 parameters. The first one is going to be the income statement that we're going to talk about. We're going to talk about the balance sheet. We're also going to talk about the operational metrics here as to how yields are, how ROAs are faring for the company. We're also going to talk about how asset quality is looking like, what is the guidance looking like going forward. Shareholding, this is a very strong company backed by Blackstone. Street cred, how has the performance of the stock been in the last 1 year? How has it been performing in the last couple of months? We're also going to talk about valuations as compared to peers. How is this company doing? Whether a slightly higher valuation is justified or not is something that we're going to talk about. And the last metric is the guidance given by the management. They're maintaining a strong guidance going forward in FY27, and we're going to quiz the management as well with regards to how this guidance fared. But let's start with the income statement first. Let's try to pull those metrics up. In terms of the net interest income, the 3-year CAGR has been at that 23% mark. This shows that there is solid loan growth, plus the spreads also looking very nice. In terms of the credit costs as well, the credit costs are relatively controlled, slightly inching up, but overall we've seen credit costs being in a stable range. In terms of net profit, the growth has been at a 25% CAGR, which is a very strong bottom line with good operational leverage is what we've seen. In terms of the quarter-on-quarter basis, net interest income, we've seen an uptick of 9%, and YOY basis we've seen an uptick of 25%. This means that there's steady loan expansion happening, plus there is stable margins as well. In terms of operating profits, up 4% QOQ basis and up 27% YOY basis. This basically means that operating leverage is kicking in. Slight moderation is happening QOQ, but we'll try to understand as to why that's happened. Credit costs overall have gone down on QOQ basis, but are up year-on-year basis. That means there's net improvement overall, and net profit has seen a growth of around 11% QOQ basis, and YOY basis it's seen a growth of around 27%. So strong earnings momentum has sustained. So overall, if you take a look at the income statement, it's certainly a thumbs up considering the way things are moving. The next one is balance sheet. Let's take a look at the metrics here. The AUM 3-year CAGR has seen a growth of 21%. Overall, strong and consistent expansion has been happening when it comes to this particular counter disbursements. If you take a look at that number, the 3-year CAGR has been 17%. Growth is steady, slightly lower than AUM, but still a steady one. For borrowings, total fund, the CAGR, overall in the past 3 years has been around 16%. Funding growth overall is healthy and slightly, more conservative as compared to AUM. But AUM being more than disbursements growth, loan book is growing faster than the fresh loans, and overall indicating lower prepayments as well. And overall, this is how typically it is in a housing finance company as well. In terms of AUM growing faster than borrowings, I think that suggests that there is improving capital efficiency and the disbursement is also slightly lagging, and that means that there is slight moderation in terms of new demand. That is something that we'll ask the management as well in terms of how demand is looking like in terms of where disbursements are standing. So that's with regards to, of course, the two metrics that we talked about. But the next one that we're going to talk about is operational metrics as to how yields, ROAs, etc. are looking like. Now, yields, if you take a look at the past couple of quarters, the yields have slightly declined. This suggests that there might be slight or mild pricing pressure. Shift to maybe safer or lower yields is what the management is probably aiming at. We'll ask the management as to why that has happened. In terms of ROA, there is a very strong profitability, for a company like Aadhaar Housing. It's gone from 4.3 to 4.8 just in the past 2 odd quarters. So a very strong profitability when it comes to the ROA. In terms of cost of borrowing, it's gone from 7.9 to 7.7, which has come down. So that is also on a positive side. And spreads are also overall stable. Around 5.8% is what we've seen. As compared to where they were at 5.9% in Q2. But overall cost to income, this is a very interesting one, because if you take a look at how the cost to income has come down in the past couple of years, 38% in FY23 to a 36% in FY26 we have seen. Most certainly a positive one. This indicates that there is improving in efficiency and operating leverage is kicking in when it comes to the cost to income ratio. So overall, in terms of where operational metrics go, it's certainly a very good set of numbers that we are seeing. Now, let's take a look at the asset quality as well. In terms of the GNPA to AUM as a percentage, there has not been much movement here. Overall, the asset quality is largely controlled is what we've seen. FY23 it stood at around 1.16, which is come down slightly to around 1.08 in FY26. For the NNPA, let's try to pull that chart up to AUM because that is an interesting one. Here also, overall, there is adequate provisioning. Slight uptick is what we've seen in FY26. But overall, this is also not very concerning when it comes to, there is no structural concern when it comes to this metrics as well. So this is with regards to where asset quality goes. Now, in terms of the next metric that we're going to talk about is shareholding. Let's take a look at how the shareholding pattern of this company looks like. Everybody knows that this is a Blackstone-backed company. In terms of where the shareholding goes, when it got listed, the promoters were holding around 76% which has come down to around 65% So slight selling has been there, but still a very well-held company. But we'll try to quiz the management around understanding around this backing of Blackstone, how long, long-term view with that stands. FIs have slightly increased their stake in the past 2 years since the listing from a 4% to around 6%. DIs have also slightly increased the stake from an 8% to 8.5% to around 9.15%, and the public shareholding has gone up from around 11% to almost 20%. So it's a well-held company fairly, and there's strong promoter backing as well. Now let's take a look at street cred as well. Now, in the past 1 year, we've seen, of course, markets consolidating, markets being under pressure as well. 1 month has been very good for the counter. It's given a return of around 12% considered to where the markets have been in the past 1 month. 3 months also, it's been in the positive, given around 8% return. But in a year, it's just up around 9.5%. So just taking a conservative approach here, we've given it a thumbs down, considering that the way it has been growing, the stock has not been that rewarding. But in terms of where valuations go, Aadhaar Housing 1 year forward price to book as per Bloomberg stands at around 2.48 times. That compared to Aptus value stands around 2.2 times, and that as compared to PNB Housing stands at around 1.3 odd times. But what analysts are suggesting is that the way Aadhaar Housing has been growing, the way the loan book is, the way the AUM growth has been like, the slightly higher valuation as compared to both of its peers is justified. And that is why we've taken a neutral approach here, though valuation is slightly higher as compared to peers. But the way it has been growing, this kind of valuation is justified, and that's why we've given it a neutral rating. In terms of, just before I go on to guidance, street coverage, 16 out of 7 analysts have given buy rating on this one. And if I'm not wrong, overall, the expectations as per Bloomberg as to upside return potential for the next year for this counter is around 22%. Moving on to the guidance part, as to what is the guidance that the management has given when it comes to FY27. What they've said is that AUM growth is going to be at 20%. I'm sure that this is a conservative one. We'll try to quiz the management on this one as well, because 3-year CAGR for AUM growth has been 21%, more than what they've guided for. PAT growth as well at 20%, so very constructive when it comes to the PAT growth as well. Disbursement growth is going to be around 17 to 18%. So that's the overall guidance that the management has given for Aadhaar Housing Finance. So that's everything, all the 8 metrics that we talked about Aadhaar Housing Finance. Now let's take a look at the rating as well. Income statement, most certainly a thumbs up. Everything looks very positive. Balance sheet also, very strong balance sheet, but just taking a conservative approach here and giving it a neutral rating. Operational metrics, most certainly a thumbs up with yields, ROA, everything improving. Asset quality, we've given a slightly neutral rating to this one, considering that it's not moved much in the past couple of years. Shareholding, we've given a neutral rating just to just from the approach of trying to quiz the management with regards to how Blackstone is looking at this holding from a long-term perspective. Street cred is a thumbs down because in the last 1 year, it's not a very attractive return as compared to the way the company has grown. Valuations, again, is a neutral rating here because slightly expensive to its peers, but at the same time, it's justified, like I said, because of the way the company has been growing very well. Lastly, FY27 guidance, most certainly a thumbs up, considering that they've given 20% growth guidance in AUM as well as 20% growth guidance in PAT. So the final rating for Aadhaar Housing comes out to be 5 out of 8, which is a very good rating. After a very, very, very short break, we're going to speak to Rishi Anand, the Managing Director and CEO of Aadhaar Housing. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Welcome back. You're watching KYC, and as promised, on this side of the show, we are joined by Rishi Anand, who is the Managing Director and CEO of Aadhaar Housing Finance, joining us. Rishi, thank you so much, first of all, for taking out the time. My first question to you is, with regards to the guidance that you've given, AUM growth at 20%, PAT growth at 20%, 3-year CAGR, if you look at your AUM growth, it's been more than that 20% mark, right? Just want to understand that this guidance is given on taking a conservative approach. Do you think you can do better than that 20% in terms of where FY27 goes?
Great. Very good morning, Mahima. A tricky question to start with. Yes, we have given a clear guidance of 20% growth on AUM, 20% growth on VAT, keep the GNPA below 1.1. These are pure guidance numbers. And, end of the day, we always give range bound. So when I say 20%, I always meant 20 to 22%, both in terms of profits as well as on AUM. And on best effort basis, why not? Our CAGR, and you're right, our CAGR has been 21%, and on effort basis, it should be above 20% as we go ahead.
Okay. The other aspect, Rishi, is with regards to how AUM has been compounding faster than your disbursements, right? Just want to get a sense. This is on account of lower prepayments is what we're seeing. What are the trends looking like when it comes to repayments? And going forward in FY27, what are you expecting?
Yes, you've picked up the right point. It is on account of lower prepayments and foreclosures. If I look at the foreclosures that was in FY23, it was in the range bound of 18-19%. Now we're talking about 17%. So lower the prepayments, higher the AUM growth will be. But from a disbursement, purely from an incremental disbursement perspective, anywhere between 18 to 20% is what we are looking at, which will compound or throw a AUM growth of about 21 to 22%.
Got it. Correct me if I'm wrong here, Rishi. You have given a target of around 50,000 crores of AUM in the next 3 years. Help us understand as to what are going to be the key drivers going forward. Is it going to be geographic expansion, ticket size increase? I mean, how are you just trying to look at that growth coming in?
So, Mahima, it is going to be, and you're right on the 50,000 crore number. Even if I talk about a 20% AUM growth for the next 3 years, that's the simple maths that we reach over 50,000 crore. There are going to be multiple things that is going to fuel this 50,000 crores, right? From, yes, expansion, keep adding 30 to 40 branches year on year. We are today 626 branches, 22 states, 550 districts being covered. Keep adding 30 more branches in tier 2 and below, which is our emerging concept. That fuels it. Second is, more importantly, you'll have to look at what is happening on the demand side. All the state governments, the central government, the PMAY scheme, the BLC scheme, the affordable housing projects. There is too much happening right now as we speak in the EWS-LIG segment. That's what we cater to. To top it up, I think it is, and we've invested a lot in the last 2 years on technology, on implementing, on getting the right AI inputs into our processes. So all that is going to fuel our efficiencies and better productivities. So I would say a combination of all three is going to fuel this 50,000 crores.
Understood. With regards to your yields, slightly they're trending lower, and this I understand this on account of PLR cuts as well as the mix in terms of changes in the mix. Just want to understand as to how confident are you going forward with regards to your spreads? Will they be maintained at that 5.8% mark?
So what we have maintained, Mahima, always is that we will always be a company upward of 5.5. Today we are trending at about 5.8. We, in the short term, I don't see any reason why this 5.8 should not be maintained. And you're right, 15 bips cut we did in February, that has impacted, and that's been across the book. So that has given a little impact. But a 5.8 is completely sustainable in the short to medium term. 70-30 breakup of home loan to non-home loan is what we're going to be maintaining. We are going to be increasing 1% self-employed. Today, self-employed is about 45% on my book. We are going to be increasing that by a percentage each year. That is by design. And that's going to help us balance out the spreads that we maintain.
In terms of ROA, it's trading at around 4.8%, which is one of the best in class. Just want to get a sense as to how sustainable is this ratio? Because I want to understand as to how much of this is structural and cyclical.
So 4.8, the number that you've been quoting is for the quarter. But if I look at the financial year complete, it is 4.3. And even on a 4.3, we happen to be one of the best in the peer group in the industry that is being delivered. And I don't see any reason why a company which has reached a 4.3, there should be any reasons why it should be dropping further. So we are very confident of maintaining the ROAs that have been delivered.
Cost to income has been improving steadily. If we take a look at how the comparison has been from FY23 to FY26, I want to understand as to how much of an operating leverage is still left, considering that there is going to be branch expansions going forward. How are you looking at that trend?
So our vision has been very clear, Mahima, that 40 to 50 bips year-on-year basis, we should look at reducing the cost to income purely by building in efficiencies. We speak about branch network, but the kind of branches we open are low OPEX branches, the low CAPEX and OPEX branches, which does not impact, and they typically break even in about 9 months. So that does not impact the cost to income at the percentages we talk about, and clearly indicating 40 to 50 bips reduction in the cost to income as we go ahead. And you're right, if I remember right, in the last 3 years, we would have dropped our cost to income by about 300 bips.
Okay, got it. Your gross NPA and net NPA, largely have been stable, and that's not a concern as well for a company like you. But I wanted to understand that credit costs have seen some volatility. So going forward, how are you looking at that trend?
No, we've been very clear on credit, the credit cost, asset quality. You indicated GNPA and NPA. There are no issues at all. We guided the market for a 1.1%. We've closed at about 1.08% GNPA, so well within range bound. Credit cost, we've always maintained that we will be a company not beyond 25 bips of credit cost, and we would. There is a lot of confidence around maintaining that level.
Understood. Rishi, you're one of those companies which is backed by, which has a very strong backing of Blackstone. Although the percentage of holding has come down to around 64%, just want to, help just want to understand in terms of, going forward from a long-term relationship view, how are you viewing, that percentage not going down?
So, Mahima, this is a question best asked to Blackstone. having said that, indicatively, you see, they came in 2019 June, if I'm right, on the month, and the rollover of the fund has just happened in February this year. Rollover obviously brings in a lot of comfort and trust on the management. It brings in a lot of stability across the way the models of private equity model work, and we as management, obviously, from a Blackstone perspective, there are no indications at all of looking at early exits, etc. So, as I said, this question better be asked to them. But as management, it gives a lot of comfort with a player like a private equity like Blackstone backing us. And yes, you're right. The 75% on the rollover came down to about 65%. 10% moved on to a sovereign fund based out of Abu Dhabi. So, but broadly, the shareholding pattern remains in the comfort zone.
Understood. Given that expectation is that the rate cycle is going to remain stable for at least next 2 to 3 odd quarters, just want to get a sense as to how sensitive in terms of, are you in terms of margins? If if there is a surprise on the upside going forward, how are you looking at that metric?
The clear view at Aadhaar is that, we have seen the peak, not the peak, the downward trend. From here on, it should be steady state given the disturbances across Middle East. But if you look at the composition of the book, Mahima, we are a 75% floating book on the asset side, and we are a 74% floating book on the liability side. So whatever comes in eventually gets passed on. And this composition of 75% and 75% helps us protect our margins and spreads. So there is no serious reason why my spreads should be under threat. Yeah, there can be always a lag of a quarter here and there, which is operational reasons, but broadly it is protected.
You've highlighted that tier 2, tier 3 markets are still very strong for you, considering, everything that's happening geopolitically with regards to West Asia conflicts. Are you seeing, any pressure in terms of, where demand goes? Because, overall, it is putting pressure in terms of when it comes to the Aam Aadmi money that comes in their hand, and inflation is certainly putting pressure on them. So are you seeing any pressure in the near term because of this aspect?
I think you chose the right word, Mahima, Aam Aadmi. That's what we do. We cater to EWS-LIG. This is the actual Aam Aadmi in the society. Aam Aadmi deals more in essential commodities. He's the guy who is lowest in the state of the society. It does not matter to him what is happening in West Asia, because he's not an NRI, and NRI flows are not coming to him. Having said that, our first line of defense has always been bouncing, etc. So we keep a close tab on what is happening on account of the West Asia issue. Is there going to be an issue around demand? See, my customer is a consumer who is doing a construction of a 2-room in a remote tier 2, tier 3 city. He is buying a small, 10 lakh kind of properties. That's the consumer I'm dealing with. We even post-COVID, we all said that markets are going to go down for the next couple of years, but this segment always prove everybody wrong. So I don't see any reasons why, especially because of the consumer that I cater to, I don't see any disturbances in that trend. Plus, to top it up with the government initiatives of PMAY, it is helping us a lot on the ground.
Right, Rishi, thank you so much for taking out the time and helping us answer all those questions that you did so candidly. Thank you so much for that. All right, viewers, so that was, of course, the management of Aadhaar Housing Finance. But with that, we're completely out of time on this edition of Know Your Company. But do stay tuned. More news and updates on the other side.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ,
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On
Cautious trade continues on the Lal Street as Nifty trades near 24,100 levels. Broader markets outperformed today. Major sectors trade in the green, barring the FMCG and energy sectors. Coforge delivered a standout Q4 number. Profit sharply beats the street expectations on strong execution and margin expansion. Brokerages turned more constructive, citing improved growth visibility, better margins and healthy deal pipeline heading into the new fiscal. Larsen & Toubro is in focus after missing revenue and EBITDA estimates, with margins slightly below the expectations. Profit growth stayed modest, but management struck a confident tone, guiding for steady growth through FY31, despite near-term pressures. Cabinet has cleared ECLGS 5.0, unlocking 2.55 lakh crore rupees of guaranteed credit to ease liquidity stress for MSMEs and mid-sized firms, and with zero guarantee fees and quick access. This stands to benefit the export-oriented MSMEs, restaurants and other businesses navigating the global disruptions. Oil extends decline as hopes of a US-Iran deal lifts the sentiment, pushing Brent towards $108 per barrel. But with Hormuz still effectively blockaded and supply recovery delayed, markets remain caught between de-escalation headlines and persistent disruption risks. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar, and let's take a look at the market. And yes, there has been a slight dip in the market at the current moment. Market has been really toying with the external pressures and the global sentiments coming in. Crude has cooled off a little, but remember, it is still way above the $100 per barrel mark, which is the concern for the Indian economy as well. Sensex almost flat to green in trade at the current moment. When we talk about the internals, well, Bharti Airtel, Mahindra & Mahindra, after strong set of numbers and good commentary coming in from the company, and also HDFC Bank, ICICI Bank and SBI, the three big boys of the banking sector, are all pushing and contributing the Nifty 50 the most. When we talk about the downside, Larsen & Toubro, RIL, from the FMCG consumption pack, HUL and ONGC Titan, these are the ones which are really the laggards in trade today. Remember, FMCG is a space which is of concern today. It is the biggest dragger. But when we talk about the sectors which are really playing a good role in the market is pharma as well as banking, some part of the banking space. When we talk about the other internals as well, the broader markets look far better than what the key indices are really showing today, over 1% up on the mid-cap universe. So that's the picture we should really keep in mind today. Sudeep Bandyopadhyay, who is the group chairman at IndiTrade Capital, joins in with a take on the market. Sudeep, always a pleasure to welcome you on NDTV Profit. How does one really play the market with the sentiment downers really coming in on a regular basis, and there is a day of gain and a day of losses? So there is a sustained volatility when we see in the overall momentum. Would you agree?
I completely agree with you, Nisha, and thank you for inviting me. I think we have to live with the volatility, and this volatility is not going to go away in a hurry. While there are positive statements which were made yesterday, and that's the reason why market is taking positive cues. But the fact remains that oil is still above $100 per barrel. The settlement in Gulf, West Asia, hasn't yet been reached. So things are still pretty tense and uncertain. Even yesterday, there were a lot of unfortunate incidents of firing by Iran on UAE. And things are not really looking to have been settled yet. So under the circumstances, I think investors will have to be prepared for volatility and act and handle markets accordingly. From a long-term investor's point of view, of course, there are interesting opportunities which are emerging, and it may be worthwhile to start accumulating good quality stocks in small doses over a period of time.
Right, so smaller stocks, and from the mid-cap universe, which is doing far better than the frontline indices today, Sudeep, what are the pockets which are really looking good, and is there still value to be made in the short term at this particular valuation levels in the mid-cap universe?
Well, I'm not sure about short term, because short term, as I was mentioning, there is too much of volatility, and it's extremely difficult to predict the market in the short term. I mean, if you are looking at technical trading, then it's different. But from a fundamental point of view, short term is extremely difficult to predict. But yes, mid-term, mid-cap stocks, opportunities still do exist. And there are pockets, whether it's pharma, whether it's auto ancillary, whether it's cement. I think there are opportunities of picking up good quality stocks. Valuation isn't cheap in any of these spaces. But if you're building a portfolio for long term, I think these are the areas you should look at.
That's right. So Sudeep, one thing, one observation from a lot of consumption companies, results in the last couple of days, like in the case of M&M, even in the case of Marico, across the board consumption space, that is seen is that the revenue growth is good, profit is good, EBITDA is good, but EBITDA margin has taken a dip because of the cost pressure coming in. How do you assess the overall, price pressure, crude-linked, intermediaries pressure and inflation really playing out in this particular earnings season?
Well, I think Q4 numbers which these companies are coming up with are definitely very, very good. And they are beating market expectation in most of the cases. You talked about Marico, you can talk about HUL, you can talk about Nestle, you can talk about many other companies. I think they are and will beat the market estimates. But I'm a little cautious for the future. As you alluded to, the costs because of the situation in Gulf is going up. not only oil, which has its primary, secondary, and tertiary impact on multiple commodities which are in the supply chain. There are supply chain blockages which are affecting these FMCG and consumer durable companies. Also, some of the chemicals are getting impacted, and that in turn is leading to supply chain bottlenecks and price challenges, cost-related challenges for these FMCG companies. I think this will get accentuated in Q1 and Q2, and I'll be cautious. Also remember that the predictions of the meteorological department, whether it's IMD or Skymet, is that monsoon will be subpar because of El Nino factor. Now, again, that doesn't augur well for the demand scenario as far as FMCG is concerned. So I will be a little cautious. I think Q4 has undoubtedly very good numbers, but Q1 and Q2, I think I'll wait and watch.
Right, Sudeep, very well pointed out that Q1 and Q2 will be difficult, and also with the monsoon impact. But Sudeep, one quick question to you. How much of the bad news of Q1 and Q2 is already baked into the market, and how much downward slide do you anticipate then on account of that from here on?
Well, I would say, if I have to put a percentage, I would say 20-30% of the bad news is baked in, because somehow the market is factoring in a quick resolution to the West Asia problem. If that does happen, I think it's well and good. But if that doesn't happen, I think things can get far worse before they start recovering. So I would say market is expecting a quick resolution, and that's the reason why 20-30% of the bad news is baked in, but nothing beyond that. So we have to be a bit cautious. And as I told you, the El Nino impact on monsoon is going to have an impact on Indian capital market and Indian economy. We need to keep that in mind as well.
FMCG companies like Marico have already been raising that particular impact to really get baked in later. But only 20-30% of the bad news getting baked in is not a good news. Time for caution, says Sudeep. Thank you so much, Sudeep Bandyopadhyay, for joining in with your expert take. All right, let's take it straight to also the stocks which need to be on our radar. Shivam joins in with the entire list. Shivam, what all made to your watch list today?
Well, yes, the first stock is the United Breweries Limited, which is down over 3%. Now, the company has reported its Q4 earnings, and the revenue has been down around 3.1% to stand at 2,250 crores. The volumes of the company has seen a better growth than the street expectations, but there were few other metrics which has, such as the cost pressure, which has impacted the growth. The EBITDA margin has also contracted on the back of the high fixed cost. The company is also expecting to see the cost impact of around 400 to 500 crores in upcoming 2 to 3 quarters. Now, next stock is the SRF, which is up over 7% in today's session. The company has witnessed a strong growth in fluorochemicals, technical, textiles and films segments. The EBITDA jump has also been around very significant, around 47%, and technical textiles has been contributing around 63% of the growth. The fluorochemicals business has seen a robust growth, which was on the back of higher volumes and better prices, and the company is looking forward to expand its hydrofluorocarbon capacity going further. Now, next stock is Coforge, which is up around 9% in today's trade, and the company has reported a strong set of Q4 numbers, where the margins have expanded by 250 basis points on the back of lower operating expenses, and the deal wins of the company stands at 9.2% which is up 9.2% to stand at $648 million.
Very good list and a detailed work on that. Thank you so much for putting that out for us. Now, moving on, the new government in Bengal is likely to be a big positive move for the industries and MSMEs doing the business primarily around Bengal, says Sanjay Budia, who, while speaking to NDTV Profit, added to this. He even emphasized that this is one of the best periods for Bengal. Let's listen in.
Very important change which has happened in Bengal sentiment. I've been talking to a lot of businessmen and conglomerates folks also. They seem very bullish. Your initial views on how this is being perceived for Bengal?
I think it is seen as one of the best periods for Bengal, as they say, Bengal becomes. So it is now the time for people who have been settled abroad or who have been settled elsewhere, whether it is Bangalore or Hyderabad. They had that kind of feeling that, there could be job opportunities more in other states, and there could be, as they say, always grass is greener. So now they will also feel that, okay, there's the time to come back and, see the future and because there is, see, we have to agree on two things. A, Bengal, because of its unique geographical location, offers tremendous opportunities. It is the gateway to entire northeast and to neighboring countries. So 7 sisters plus the Jharkhand, Bihar, Odisha, and then all the countries like Bhutan, Myanmar, Nepal, Bangladesh, whatnot. So it's a big area, and Bengal being the center of that hub, basically. So there is a huge number one. Number two, there are resources, mineral resources, where Bengal has huge age and advantage. So taking care of these two advantages, definitely we should now cash in to have some large manufacturing units which will spur growth, investment and employment. Bengal has been, mostly we have seen small and medium industries doing much more than larger industries. So it's the time now that we should also get some larger industries. So it will have a multiplier effect. As far as we are concerned, let me also give you our example.
Sure.
Basically,
Just wanted to understand a little bit. What are the industry demands looking like, sir? Now, presently, what would you be asking, as an industry in which you are working or the Bengal's businessmen are working? What kind of bottlenecks should be addressed first?
I would not say bottlenecks. We can say some of the few challenges or some of the actions, like you say, short hanging fruits, or what is medium term, what is long term. So some of the things which should be taken on priority basis is some of the incentives. You have to be at par. Basically, ultimately, all states need to offer. Now there is a competition not between countries but within the states also, which is very positive.
All right, so that was all the verdict really coming in from the state of Bengal there. But let's shift our focus back on the earnings momentum. Marico is the FMCG player that we are really talking about. Take a look at the numbers. Of course, the stock is really rewarding today, 2.5% up. And why not? The good set of numbers, strong growth momentum. All right, Saugata Gupta, MD and CEO of Marico, joins in for more on the numbers. Saugata, a good set of numbers, revenue growth, net profit growth, EBITDA growth, but EBITDA margin on a YOY basis has really taken a dip. What's really eating into the margins of the company?
Last year, as you know, there was a 100% increase in copra, which was 50% of our overall input cost in the basket. So I think that we have already seeing a fall in the copra prices, which is they are around 30-32% from the peak. And while I agree that there is a crude-linked inflation, when you have a 30-32% reduction in 50% of your commodity basket, the crude basket is around 20%. So we are net better off. So there is no risk to that. And number two is to take care of the crude-linked basket. We have already taken a 78% kind of a price increases in that part of the portfolio. So I think we are extremely comfortable with respect to margins at this point if time is concerned.
All right, comfortable as of now, but Saugata, the war really continues, crude pressure will continue. What is the guidance for this particular quarter, and will the price hike really offset for that inflation?
It's very difficult to get into a quarterly basis. I think what we have given is a yearly outlook, which bakes in the fact that there would be a heightened crude for the balance year. Obviously, if there is a resolution to the current situation, crude will go down a bit, but it's not going to go back down to 2026 levels. And therefore, the supply assurance issues and all this has been baked in. With that, we are extremely confident of we should be able to deliver a double-digit revenue as well as a high teens EBITDA growth. And the reason, as I said, comes back to the fact that we believe that the copra is now range bound at 30-32% of our, below the last year's peak. We have taken a 10% price drop in Parachute in the non-price point packs, and given that that's the kind of a outlook, I think with that mix, even if there is a heightened crude, and we are obviously monitoring the effect of El Nino in the second half of the year, we are at this point in time reasonably confident. But in today's world, obviously, there could be multiple black swans, which you can't predict.
Right, so El Nino effect also will play out in the second half of this financial year, or this calendar year. But what about more price hikes? Do you think that you will need that? And will the market absorb it without impacting the demand?
I think we have taken some price hikes in the crude linked portfolio around 7 to 8%, and we believe this is good enough at this point in time. We'll wait and watch.
Saugata, your stock has been upgraded by the brokerages because of the strong momentum for FY27 outlook that you have given. What are going to be the key drivers for this strong outlook to play out?
I think we have been able to consistently execute multiple vectors of growth where we have a reasonably profitable core, which has shown significant resilience. Nowhere in the world a brand has taken 60% price hikes and delivered flat volume growth. Actually, it's a slightly positive net of MLH like Parachute has been able to do. I think our entire strategy on value-added hair oils is now playing out, which is investing behind the mid and the premium part of the portfolio, investing behind brand building equity as opposed to fighting it out with trade spends in the market, which is suicidal. Thirdly, I think the diversification play, which is now not only growth but profitable. We have amongst a lot of other peer set companies, one of the more consistent and profitable international play, which is again multiple vectors where we are significantly reducing our concentration risk of Bangladesh while I premiumize. So therefore, there are multiple vectors of play. Some years, some might not deliver. Some years, some might deliver. But my point is that the majority today are on a momentum, and I think one of the things that is unique to us is we have a management which is there for the long term with a long-term view and consistent execution. For us, the founder's mentality, ownership mindset in the leadership, which leads to high degree of consistent execution and also ability to cope with adversity. And I think it is a very battle-hardy team in terms of coming from whether it's COVID, Ukraine, we had last year significant cost push, and this year. So I think that helps. And I think today, I would say significant amount of the vectors are firing consistently.
All right, so looking confident there, Saugata, but my question also, how is demand picture really panning out with inflation, war impact playing out? And also with that urban demand pickup, are you seeing that and also volume growth?
Last year, I think pre the GST rationalization, we had already seen rural picking up. I think overall, a significant benign inflation and along with the GST rate rationalization, which also encouraged a lot of unbranded to branded as small players to large players because the consumers are aspirational. I think that helped the urban growth. We believe that so far, compared to a lot of emerging markets, our consumers have been shielded from inflation. I think the government has done a fantastic job in protecting that, insulating the consumers. And obviously, there is a watch out as far as inflation is concerned or what can happen with the El Nino effect to the second half of the year. So far, I think demand is in control. And the other larger thing which will help, I believe, the organized players is during a little bit of crisis which we are facing in terms of supply chain assurance, which needs working capital, which needs a far more agility and deep pockets. So larger players' ability to cope with this is far better than the smaller players. And therefore, in today's situation, the larger players in this sector are likely to consolidate and volumes in favor of the smaller players. So given that, if I look at the larger players in the sector, the listed set in the sector, I think this year will continue to be decently good.
All right, this year continues to be decently good. But as a sector leader also, Saugata, how are you seeing this West Asia conflict really impacting the overall sector and also your company? If you can give an outlook for this year.
Break it up into two parts. I think a resolution which is perhaps on the cards, and then obviously there will be some softening of crude-led thing. We believe that it will obviously be at a higher level. So we have to manage with and bake in a higher level of crude prices and crude derivatives for the rest of the year. Having said that, I think it depends on the company's mix. It depends on the company's portfolio in terms of how much, a lot of Indian companies we are present in Middle East. In Middle East, to be honest, other than the supply chain constraints, we haven't seen a significant demand, rationalization or something like that. For us, for example, Middle East contributes to 4% of our this one. We are not seeing any major concerns. So we are hopeful. I think it's good to be optimistic sometimes that there will be a resolution sometime soon, and things will, while it will not go back to the normal of 2026, it will soften definitely for the current this one. But yes, this year will be a little tricky for a lot of people, especially those who have significant amount of crude-led basket in the input costs.
All right. Thank you so much, Augata Gupta of Marico, really giving the full perspective how this year is going to pan out for the company and the sector. Thank you so much. All the best for the next quarter. And there you go, over 2% gain when it comes to Marico after a strong set of numbers, slightly pared down from when we started the discussion. All right, a new risk is really haunting the Indian banks, not myth, but mythos. Well, Kotak CEO says that AI-driven cyber threats now strike at machine speed, not human pace. Banks are really racing to upgrade the systems. Piyush, my colleague, is here with all the details on this. Piyush, tell us.
That's absolutely correct. In fact, Kotak Bank CEO Mr. Vaswani said that AI risks keep him awake at night, and now bankers have to respond to AI-based threats on a real-time basis and act like machines to actually counter these AI models. We are aware that Anthropic-built Mythos can spot vulnerabilities in a bank's IT system or any operating software in real-time basis. Banks have actually stepped up their investments as well on cyber front. HDFC Bank CEO said that the bank's spending has quadrupled in terms of tech spending to over $1 billion in FY26. PNB has earmarked around 3,500 crore for digital cybersecurity infrastructure, and ICICI Bank says it spent around 11% of its OPEX just on digital infra in the last financial year.
All right, Piyush. So that's one very important development to watch out for when it comes to the banking sector. A quick update on Vodafone Idea. The stock is gaining today because of the changes in the board and non-executive chairman position. That has been regained by Kumar Mangalam Birla. Remember, in the year 2021, he had stepped down when AGR dues were really haunting the company. And now with AGR dues issue and waiver really coming in with clarity, company really looking at the future prospects of growth now. And also remember, the government's indication is that we need 3 healthy telecom operators, and therefore a lot of waiver and bailing out has been done behind Vodafone Idea. After all that is over, now the company is looking at the growth prospects going forward. Lenders are being connected for raising funds for the growth potential as well. So therefore, Kumar Mangalam Birla steps up as the non-executive chairman once again for confidence boosting measure for all the stakeholders post the AGR waiver. Also, it does a few other things. KM Birla as non-executive chairman to give comfort to the lenders at the fundraise event, and also important signal and very important to dispel the rumors on sale of the company to any other promoter group. So those are the indications and messaging with this top appointment. So keep an eye out on Vodafone Idea. With that, completely out of time on markets at 12, but do keep it with NDTV Profit. Thank you so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show. Just
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hira Datia, and Puneet Joheri, who's standing at the NDTV Profit market pit. With all the action in the market today, Puneet, it's an interesting day of trade because that tug of war somewhere continues as well, because last 7 to 8 trading sessions we have been in a pretty broad range, specifically when it goes to Nifty 50, and it's broader markets which is seeing buying at lower levels. So that's where probably value is emerging.
Well, most certainly, and we're seeing that consolidatory phase continue for the Nifty 50 today as well. We're off from the day's high, and we've been speaking about 24,300 being a zone where the markets have seen pullback time and time again. Today, from that 24,250 itself that has happened today. So when you look at the key factors that we're looking at for the markets today, that has been one of the key factors. So 24,000 continues to be a key level where we come back to it and are seeing consolidation even on most of those days as well. 200 points off from the day's high, but the mid and small cap index continue to power through at this point of time. Mid cap index now at the day's high at almost 1.4%, small cap also at 1.2%, but within the indices you've seen pharma as well as healthcare continue to be the big gainers for today. And Coforge, in terms of individual stock movers, now up 10% after a blockbuster set of numbers. But the fears of a larger Anthropic entering into the IT service domain and also seeing cognizant that 15,000 layoff number is definitely catching the street, at least a bit of cold in that sense for the IT majors. So you're seeing TCS, HCL Tech, Infosys all down. It's only Persistent and Coforge that's driving the market today. And in terms of the other individual movers, you're seeing SRF and Hero MotoCorp report good set of results. And L&T is continuing to disappointing the street today, down 3% and is the biggest Nifty loser. But that is what's happening in the markets today. But Hero, back to you.
Okay, so that's with regards to where markets go, but let's quickly look at the watch list. Indigo is in focus, and this is on the back of the ECLGS 5.0 for airlines that benefits the company. M&M brokerages have been absolutely upbeat. Bajaj Auto will be in focus on the back of earnings and the buyback announcement that could be coming in. L&T, brokerages have been flagging concerns, and that's the reason why you're seeing pressure there. Embassy Development, that's moved out of IBC classification, and that's the reason why you're seeing a strong surge coming in. Elecon Engineering is buzzing on the back of volumes, and you have Coforge and Signity Tech both that are in focus, one on the back of numbers and two on the back of the merger completion. United Spirits, the premium segment, has been driving growth for the company, and you have a UBL on the other side, which has actually fallen short of estimates. That stock is at a 52-week low. Wockhardt also in focus. The stock is up 19% in the last 4 trading sessions, and this is on the strong performance in terms of FY26, a profit number only after FY22. Strong volumes building up on Force Motors as well, and Vodafone Idea. Kumar Mangalam Birla has been appointed as non-executive chairman, so that's providing a sentimental breather to the company. Cohance is also up 60% in the last 1 month. In fact, the fillip with Umang Vora joining in is what is probably working in its favor. And you have Netweb Technologies, where your FY26 revenues have actually surged to 90%. So that's what we're watching out for. But let's head across to Puneet to take the rapid fire with Lakshmikant Shukla from Yes Securities.
Well, Lakshmikant, very good afternoon to you. Thanks so much for joining in. The first stock, Embassy Developer, stocks up and locked in upper circuit as well. But what's been the larger trajectory on this one, and what should investors do and keep this on the radar?
MSC Development has seen a gap up opening today, and now it has surpassed its previous swing high. But overall, structure is still on the bearish side, as secular trend is on the is trending lower. So until we see any decisive move above the levels of 61 to 64, we will remain slightly negative. And if it breaks the key support levels of 55, then further decline is possible on the lower side.
Lakshmikant, let me put across a couple of stocks, Cigniti as well as Coforge. Now, of course, Coforge has acquired Cigniti, but on the charts for both of those, what's the outlook?
See, Coforge has already gained around 10%. So overall sentiment is on the bullish side, and we are also quite positive in Nifty Midcap IT space. Look at the trend of the persistent. It has found support from its ascending trend line, and so we could expect upside move in persistent as well as in Coforge. So we could expect current momentum will continue in Coforge, and probably it could surpass its previous swing high, and we will see 1,350 levels soon in Coforge in the upcoming sessions. And the support which I am expecting, it is trending on the downside toward the levels of 1,240 to 1,230.
Good. Well, that's a big upside coming in on Coforge from Lakshmikant, but also on Elecon Engineering. Results had multiple one-offs, but on the charts, what does it suggest?
For Elecon Engineering has seen a decent upside move. A few days back, it has also surpassed its previous swing high of 525 and is still trading above this level. So we will remain positive till it holds this level. Now further breakout is expected once it crosses the levels of 575 to 580 range. Once it crosses this level, then after we will see further bullish momentum in this stock, which could push it higher toward the levels of 600 to 610 range.
Also on Netweb Tech or Lakshmikant, because we've seen a very strong up move, then some pullback from the highs. Is the momentum back right now on this counter?
Yes, probably this stock has seen a consolidation breakout in today's sessions, and 2 days back it has seen some sort of decline, but that decline has bought with the formation of bullish candle, as in today's sessions it has already given consolidation breakout. So we could expect higher momentum in this stock. Support is intact around the levels of 4,200. As long as it holds this support, positively will continue, and we will see upside move toward the levels of 4,650 to 4,700 on the short-term basis.
And a very quick view also on Wockhardt, another result which was a very strong one in this quarter. Very quick view on Wockhardt as well.
Wockhardt has also seen a positive momentum, but it has already gained around 13% on the daily chart. So I think one should wait for the dip around the zone of 1,580 to 1,600 levels. I think that would be the good levels to take entry. But the traders who have already bought this stock can continue to carry this momentum and can expect the upside levels toward the zone of 1,800 to 1,820. And our view will remain positive till it hold of the levels of 1,550 on the downside. So wait, if someone want to initiate fresh long, then one should wait for the dip toward the levels of 1,580 to 1,600.
And the last stock on the radar, Force Motors, that's one yesterday launched a new model as well, but it's off from those highs of almost 25,000. Is there enough evidence on the charts to suggest we can go back to those levels?
See, after a few days of decline, this stock has seen a positive momentum on the upside, but still having multiple hurdle around the zone of 21,400 to 21,000 zone until we see any decisive close above this level of 21,400. I think one should be cautious. But if it is able to surpass above the levels of 21,400, then we will see revival on the upside, and we could expect this pullback move to extend higher toward the levels of 22,400 to 22,500 zone.
Got it. And just one more, Lakshmikant, since we've seen a very big up move on Cohance in the last 1 month, as of course driven by a change in management, but on the charts, do you think that, because stock had fallen almost 58% from the highs in the last 1 year, now up 60% from the lows, but is there enough momentum even from these current levels, or will we see some respite from here?
No, yes.
Cohance Life, Lakshmikant.
So, base the levels of 450 to 440 kind of range, and from there we have seen the formation of bullish candle. Further breakout is expected of the levels of 500. Once it started trading of this level of 500, then we will see more bullish momentum in this stock toward the levels of 630 to 640 range.
Right. Got it. Well, thanks so much for that, Lakshmikant, giving us your view across a bunch of stocks. But Hiral, back to you for what's trending on Google right now.
The trends are always very interesting, because yesterday we did see a Idea Forge which was trending today. Sorry, you have Idea Forge which continues with gains of 2%. CAMS was there on the list yesterday as well. Vodafone Idea, PNB on the back of earnings, and HFCL. In fact, Lakshmikant, let me come to you when it comes to two names. One is Idea Forge and a Vodafone Idea. Both of them seeing some good momentum in trade today. Would you still be a buyer at current levels? Okay, I think we have an audio issue with Lakshmikant, but trends are really strong here, where volumes have also been picking up. But thank you, Lakshmikant, so much for joining in. It's always a pleasure to speak to you as well. But moving on, Raymond has reported its Q4 numbers. Let's quickly look at the profits down around almost 99% at 1.1 crores versus 133 crores, though the stock is at the day's highest levels. And the loss is because of a one-time loss of around, the profit number is lower. There is a one-time loss of 20 odd crores. Revenues have grown 8%. Margins have also improved substantially, 5% versus a 9.8%. And there has been a tax credit of around 7.8 crores this time around. So it's a decent growth, mainly driven by auto components. Let's get in Gautam Maini, CEO at Raymond, to talk to us about the quarter. Gautam, welcome to the show. Always a pleasure to speak to you. Yes, the profits have dwindled this time around. Would you say this could be a one-off? And how are you looking at an entry in terms of FY27 with how Q4 has panned out and with what's happening globally?
So just to tell you, it's the consolidated performance doesn't actually give you a true and holistic representation. So what I'd like to do is to focus a little bit on the two segments which are actually contributing to a more significant growth. So if you look at these segments, it's basically aerospace and the automotive. Aerospace has grown, 26% year on year on the revenue side and 25% on the EBITDA side. And the precision technology and auto has grown, low double digits on the revenue and over 34% in the EBITDA side with a one-time, profit of 13 crores. So both have actually done, in spite of tariffs, in spite of the wars and everything else. I would say both the segments operationally have performed very well and as per what our expectations have been. So in that sense, I would say that it's turned out to be a good year. And we expect the same momentum to carry on in the next year. If you look at the aerospace story a little bit in particular, the there's a global backlog of 17,000 commercial aircraft, which represents over a decade of revenue visibility. So honestly, it's not anymore a position of your market position or market order. It's more about execution. It's about how you can do this in a high mix, low volume segment, how you can make use of scalability and experience to take the business to another level. And I think that is the critical thing, because many of these businesses have huge walls, and you need 2 years, 3 years sometimes to get approval from these OEMs. And we have over 25 global customers now, and that helps us to scale the business.
You know, that's an interesting point that you make, Gautam. So my question then is, I mean, the focus categorically is the engineering business now, right? And you're looking at sunrise sectors like aerospace and EV components that will drive growth. So what is the estimation that you have in terms of the engineering revenues over the next 2 to 3 years? In addition to that, where do you see margins and operational performance settle in or normalize from here?
So basically, if you look at the details, the growth will continue to be in a similar fashion. We will continue to grow both the precision and automotive sector as well as the aerospace sector. In the precision and automotive sector, particularly, we did a lot of work on the hybrid sector in the global market, and we made some very good inroads there. And that market has been growing. So we played on the right spaces in the right markets. Both revenue and EBITDA, revenue in the automotive and precision will be in the lower teens. In the aerospace will be around the 25% mark in terms of growth. EBITDAs, because of operational performances getting better, favorable product mixes that have happened last year, and that will continue this year, will also help us to keep our EBITDA margins pretty much like how they have been last year, without the exceptions. So all looks good to keep the same momentum.
Well, Mr. Maini, good afternoon. Thanks so much for joining in. It's Puneet this side. Just what you mentioned on commercial airlines and how big of aerospace could be a division. We're also seeing multiple larger players also enter within India. What's your right to win strategy in that sense? Is it largely just the execution that will drive the gains in terms of order book wins also? Or is it that because the opportunity is so big that the early movers get the advantage?
So the opportunity is very big. We've been in this business for 22 years. We've had the early advantage. We also started, if you remember, with the engine segment, which is now a lot of people are paying attention to, which is the more difficult segment, because in the engine segment, you have more complexity. You have very difficult materials like Inconel and titanium, which are not easy to machine. So we took the difficult path, and that's paying off now, because we've been able to then get on the best global OEMs from both Europe and US as part of our customer list. And that's helping us to go up the value chain quicker. It takes a long time, and hence you have to be patient to grow. But we've now reached a stage where you may have heard of our Andhra story, where we're going to do the next phase of growth. So all of that is planned on the basis of the last 22 years of experience. And now we will unleash the future based on that relationships that we've built and the strategies that we have to go up the value chain.
So just a perspective on your order book, because 2,350 crores, while quite strong, what is the execution timeline for the same? Is it that it can go down, or these orders will be executed in the next 3 to 4 years? And what's the order book number that you are targeting? Is it essentially doubling in the next 5 years? Is that something that could be on the cards?
So the order book will keep increasing. What happens is you typically have 5-year or 10-year contracts, so depending on when the contracts are expiring, you will be renewing them. But I think what is more important is the growth in those order books, and that growth happens on literally a monthly, quarterly basis. And this is only the current situation. With the growth that we are targeting, this is expected to continuously increase at a larger pace. As we get more complex products and longer term agreements, the order book will then see significant rise as well, depending on whether it's a 5-year, 7-year, or a 10-year order that you particularly do in a certain contract. So I would say this will only grow. The pace will be determined by the combination of products that you will get over engines, structures, systems, landing gears, hydraulics, fuel. We're in all of these different areas because we're basically high precision machining. So we go across the entire platform of the aircraft.
Okay. Gautam, we were having this interesting conversation with regards to what's happening with EV and what's happening with hybrid
in the newsroom a couple of days ago. And I do remember you mentioning that hybrid market is stronger right now versus the pure EV market. If you have to look at that aspect, how is FY27 actually shaping up in terms of an order book balance between the two? And what's that trend that you are seeing between hybrid as well as EV?
So I'll separate the marketplaces. What I referred to last time was the export market purely and not the Indian market, because the Indian would have a different story. The export market, especially in Europe, is pretty much hybrid driven now, and the EVs have taken a hit relatively. They're not gone, they've taken a hit. So our bet on the hybrid market has been very good. We look at the hybrid market itself growing between 10 and 15% this year for us, which is quite a significant growth in that particular segment. So we are pretty bullish about the hybrid market, and we are also looking now to take this to other customers that we have. So hopefully that will continuously grow, not only in Europe, but also in the US.
Follow-up, are you seeing a similar trend develop in India as well?
I would say in India, the pure EV market is pretty strong. India is a very price-conscious market, and hybrid gives you a great solution for longer distances. In Europe and the US, you need to travel much more. Whereas, in the Indian cities, your EV has enough battery capacity to get you through. So I would say the trend is not the same in India. I would see that the EVs would be more popular than pure hybrids in India, but it's the other way around in the European and the US markets, as per me.
All right, Gautam. Thank you so much for speaking to us at NDTV Profit. Always a pleasure to get insight. So that's the management of Raymond Limited citing what's in store in terms of FY27 and the trends that he's picking up so far. But moving on, the cabinet has cleared ECLGS 5.0 targeting a 2.55 lakh crore in fresh credit flows. Now, this would be a potential game changer for small and mid-sized businesses. But how are the lenders actually viewing the rollout, and who gets impacted by the scheme? Let's get in Piyush for more details. Piyush, over to you.
Yeah, that's absolutely right. This is a very big positive for the MSMEs, and bankers have become more favorable in terms of lending to small and mid-sized companies, especially those who have an export-focused business. We do understand in the last set of ECLGS scheme, when it was rolled out in COVID, the delinquencies were not much high, and not each MSME actually opt to get this dispensation as well. So we are talking to bankers, especially the public sector banks are looking at growing their MSME book quite sharply, because they're actually aiming to grow their RAM, which is retail, agri and MSME loans, because it helps them in terms of yield as well. So both from a business perspective and a growth perspective, bankers are looking very positively to this. MSMEs who are in the segments of engineering goods, textiles, apparel, gems and jewelry, chemical, pharma, etc., they are expected to be getting a fresh loans now from banks. And there is one clarity that some bankers are seeking, whether this dispensation will also be allowed for working for term loan, because the current speech and the current statement which has been put out mentions only about working capital loans. So that is one clarity bankers are seeking. Back to you.
Thank you so much for that. In fact, let me get in Tapan Doshi as well. Tapan, welcome to the show. Always a pleasure to speak to you. Piyush actually got down details in terms of how the scheme would actually benefit a lot of sectors. I mean, aviation is one of them. You're seeing those kind of gains coming in for Indigo. According to you, what could be stocks that investors could look at on the back of the benefits that are flowing in?
This is good for banks. If you see a government guarantee, somehow a cushion will always help the bank, and it encourages MSME loan sanctions. Okay, again, lower credit cost pressure will be there. Again, better loan growth will be there from here. So if you ask me which are the banks, then I think MSME heavy lenders like SBI, Bank of Baroda, PNB, in the large banks will be benefited. Small business banks like AU Small Finance Bank, Ujjivan Finance, then Equita Small Finance, and they are the banks now which will be benefit, because government is coming in between also a little bit, helping through lending, guaranteed lending and all that. MSME and NBFC, even because of low credit risk, like Cholamangalam, even Shriram Finance will be beneficial. So aviation, as you rightly said, both SpiceJet and Interglobe Aviation will be benefited out of this. So yes, it's a good package which will benefit both the MSME and the banking and lending businesses.
Got that view, Tapan, and welcome to the show. But Bajaj Auto continues to be a stock that's in focus today. Results come out today, but more importantly will also be the buyback amount as well as the price that they decide to do. So in terms of the results specifically, is expected to be over a 25% growth. Revenues looking to rise at 15,700 odd crores. EBITDA margins at 20.4% will continue to be the focus. Profit also at 2,615 crores will be a key one to watch in this particular quarter. But more importantly will be the buyback. Now, we've spoken that this is the second buyback for the company in the last 2 years. Last was in 2024, where shares were bought back at 10,000 rupees. Post that, we've seen an up move, but back to those levels yet again. So could be very interesting the amount that Bajaj Auto decides to buy back the shares at. 4,000 crores was what the amount was in the last buyback, and 2022 shares were bought at 4,600, which was a 2,500 crore buyback. So that would be one of the major ones to watch out for. But also in terms of the other key aspects to watch, Tapan, how are you viewing this counter now? Because we see that KTM also was one of the other growth areas for the company. Outlook for FY27 will be something to watch. What's your opinion?
Well, it will be wait and watch, Puneet, now, because we have to see what will be the buyback price and also, but overall, of course, now last 2 quarters were positive for Bajaj. If you see their export recovery is good from here also. Premium bikes now is scaling high. Chetak EV expansion is very good. The only thing is we have to see now raw material prices if it goes up because of this war scenario and all that. And of course, EV market, lot of competition there, whether able to contain that margin or not. Now the stock is not so cheap as it was used to earlier, as the stock has already gone up. So it will be wait and watch. I think we have to see the buyback price and the performance of the quarter, then only take a decision.
Got that view, Tapan, but its peer Hero MotoCorp was also in focus today. Results came out yesterday, a very strong set of numbers, over a 29% growth seen in its revenue, but largely conference call today focused on the future. Now the company has mentioned, Harshvardhan Tichale, the MD of the company, has mentioned about a 1,500 crore capex that the company is looking to do in the next year, and this will help in doubling the EV capacity. Listen into what he had to say.
In Deluxe 125 segment, we did have a dip in the very first quarter of last financial year, but thereafter, for 3 quarters, we've been gaining share quarter after quarter. Going forward, our investments in these growth segments will continue. We are investing in capacity expansion, and we have committed over 1,500 crores of capex in FY27, and this capex is going to expand our capacity in scooters, where for some of our models that are doing very well, we are doubling our capacity. In EV, where in fact in a matter of a month, we would double our capacity from where we started last year, and then further down the road in few quarters, there'll be further doubling of capacity as we are seeing great momentum for our Vida brand.
Okay, so that's Hero Moto. But moving on, United Breweries and United Spirits, both of these counters are in focus on the back of earnings, both trading under pressure. Now, United Breweries, the overall growth has been disappointing on the back of cost pressures. Volume growth is better than expected and margins have contracted as well. They're expected to see 400 to 500 crore cost impact in the next 2 to 3 quarters due to the Middle East conflict. Likewise, if you see United Spirits as well, FY26 sales growth is up around 7.7%. The net sales value growth is 3.7%, and FY26 is around 7.7%. Prestige and above category growth is at around 5%, so that is what has led to this growth. And you have a popular segment which is degrown 13%. Both the stocks trading under pressure. Tapan, your views when it comes to United Spirits and United Breweries?
Both the stock is facing the input cost pressure. If you see, even the state regulation is actually quite unpredictable. That is why also you can see the volume hit also. Summer demand, we have to see how will be the impact. But from here, I think hopefully they are able to sell more premium brands, then the margin may improve. But from here, I think still both the companies will see a little bit pressure both on volume front and the margin front. So I wait and watch. Currently, I don't see any buy at both the levels.
That's with regards to where both of these companies go. But thank you, Tapan, so much for joining in. Always a pleasure to speak to you as well. And the other two stocks that we were going to talk about today is L&T as well, where you have brokerages which are not really happy with the way the commentary has been for FY27. So that stock is the top losing sector stock on Nifty 50. And you have Coforge, an interesting one coming in there because their executional order book is seeming very strong. And their Q1 FY27 revenue is going to be flat. QOQ is what you're watching out for. The stock up 8.5% as we speak. But completely out of time. With that, it's a wrap on this edition of Trending Stocks from Puneet, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Reports with me, Gauri Dwivedi, weeknights on NDTV Profit.
New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
Continues on the last street as Nifty trades near 24,000 mark. Broader markets overperform as well, and major sectors trade in the green, barring FMCG and energy. Coforge, meanwhile, delivers a standout fourth quarter profit, sharply beats street expectations on strong execution and margin expansion. Brokerages turn more constructive, citing improved growth visibility, better margins, and a healthy deal pipeline heading into the new fiscal. L&T, meanwhile, is in focus after missing revenue and EBITDA estimates, with margins slightly below expectations as well. Profit growth stayed modest, but management struck a confident note and guided for steady growth through FY31 despite near-term pressures. Meanwhile, the cabinet has cleared ECLGS 5.0, unlocking 2.55 lakh crore of guaranteed credit to ease liquidity stress for MSMEs as well as mid-sized firms with zero guarantee fees and quick access. This stands to benefit export-oriented MSMEs, restaurants, and other businesses navigating global disruptions. Oil, meanwhile, extends decline as hopes of a US-Iran deal lift sentiment, pushing Brent toward $108 a barrel. But with Hormuz still effectively blockaded and supply recovery delayed, markets remain caught between de-escalation headlines and persistent disruption risks. Good afternoon. You're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets. And when you talk about, whether you talk about sectors or the Nifty 50 as well as the Sensex, you're looking at a little bit of a weak picture right now. So Nifty just a little bit, close to its day's lows as well, and Sensex also about 180 odd points cut coming in. On the Sensex, you do have the sectoral picture that is also tilted in the favor of green, at least at this point in time. So there's actually energy, oil and gas, FMCG that are on the back foot in terms of the sectors. And other than that, when you talk about pharma, realty, auto, and financial services as well as rural and metals, those are some of the sectors that are shining quite bright right now. When you talk about some of the list of losers as well, there's a bunch of counters that make it to that list from within the broader universe as well, and from within the Nifty 50. Now, when you talk about something like a KPIT Tech, Exide, Schneider, Ather Energy, those are some of the counters that are down from the broader universe. And when you talk about Nifty 50, L&T, of course, on the back of its earnings, 3.4% knock. Benchmark Reliance as well, also trading with a cut of about 2%. And on the flip side, you do have a bunch of counters like Dr. Reddy's, Trent, Interglobe Aviations, as well as Cipla and SBI Life in good shape right now. But that said, let's also quickly take a look at the world of commodities in terms of what that is also doing right now. Now, you do have gold as well as oil that are in focus, and let's also get you some important insights. In fact, Vandana Bharti, AVP Commodity Research, SMC Global Securities, is joining us on the show right now. Vandana, first things first, I wanted to try and understand what you think about the decline that we've seen of late when it comes to oil prices. Now, prices are still elevated, so there's actually a couple of kind of triggers that you're looking at, isn't it?
Yeah, this is because of the pause on Project Freedom, and they won't squat ships. So this is a relief for the market, and because of that, we have seen a decline in the prices. But it is too early to say that, okay, they are reaching to the peace deal and all, and the prices will move down. Soon it will see support near the level of $95 because it is completely decoupled with the spot market. They are paying $150, $135 for crude oil, and in WTI it is only $100, and Brent is showing $115, $110. So this derivative market has been decoupled with the spot market for the time being, and it is the main problem of this market. So yes, very limited downside in oil is right now expected from my side, and it is $95. From there we can see an upside in the prices, because any time we see de-escalation or escalation issues or statement coming out from Iran and US.
No, absolutely, and that decoupling has been quite interesting to also witness, Vandana, just like you rightly pointed out in terms of the spot and futures prices. But when you just talk about the fundamentals and put the contract aside for a bit, just talk about fundamentals for crude as well, you're looking at thousands of tankers, vessels that are still remaining trapped in the Hormuz. So do you think that the entire upside for oil prices still very much remains? And do you think that the baseline has also shifted for oil prices? Because some of the infrastructure worries, they're not going to go away, and they're not going to be fixed for at least a few months to years.
Agree with you, because if we consider the data, because it should be based on the fact check and data based, and day before yesterday only one ship crossed the Hormuz, and the normal data is 130, 126. So this is the intensity of how much serious is this problem, and they are considering the longer route. Ultimately it is increasing the freight charges, insurance charges, and despite that only 30% of crude is reaching out to the destination. And this is going to completely uplift the base case of crude oil. Earlier it was $65, $60. Now it is $85 to $90 for 2026 if the problem persists here. And then we can see the higher side of, in fact, $115, $120, because this is the price level which market is indicating. And there is a worse condition in physical market. And if we consider the Indian import crude basket, it is telling the whole different story.
In a very different story, and we'll not get into that because we briefly touched upon that as well. But when you talk about gold prices, a little bit of a rebound that you've seen, Vandana, largely, do you think it's just the weaker dollar, or do you think that it's the entire safe haven demand picture that is shifting right now for gold? What are the current factors that you're looking at when it comes to this little bit of upside that is yet again emerged for gold prices?
Yeah, this is because of whenever we see a kind of de-escalation news, gold prices, it generally jump this time. So because of the crude oil prices and downside in dollar index, it is moving up. And second thing is that we have the bad data. They are they have started to come in the market, and we have seen a very weaker data from few of economies. Chinese real estate market, it is not doing good, and Bank of Australia, it has increased the interest rate. So the we can say that the circle of interest rate rise, it has already started, and it is giving a pressure to the equity market as well. So it is not always like the higher interest rate is giving a pressure to the gold prices. Because of the weaker data, gold is again up because of the safe haven buying, and dollar index is down. So because of that, we have seen a safe haven buying return to this counter, and we are getting continuously like bad news from political front, economic front and all. But yes, this time gold has limited upside near the level of 47 up to the level of $47.15 to $47.50. And there we can see a halt in the prices, because ultimately this crisis is creating cash crunch.
No, absolutely. And that cash crunch could be, very visible when it comes to certain pockets of the market. And that's also something that you're looking at in terms of the reflection of trading behavior as well at this point. But, when you talk about the medium term or, any sort of timeline that you have in mind when it comes to gold prices, where you do see gold, staging a decisive upside?
It may take the month of May to July, because if we consider the last war of Ukraine and Russia, earlier we have seen a rise in the prices of gold, and we have seen the consolidation of 4 or 5 months, and it is happening right now in gold prices. After that, we have seen a bull run from $2,000 to $5,600 kind of level. So longer the consolidation, higher side breakout is expected, and higher upside will be expected in the market. So $4,600, $4,500 is becoming a new support level for gold prices. From there, the prices should take an upside. And this time we are expecting, first of all, we are expecting 5,200 kind of level till the end of 2026, 5,200 to 5,400 kind of level. But yes, this structural bull run in gold will continue in 2027 as well, because as soon as the war will end, de-dollarization will happen in faster pace actually. And because of that, we have seen a quick rally in gold prices.
No, absolutely, and that makes a lot of sense in terms of how you should be looking at it. Thank you so much, Vandana, for taking time out and joining us. So there you go. That's a sort of double update also coming in. Not just a price level, but also a month to really watch out for. May to July, expect a little bit of a range-bound move when it comes to gold prices. After that, you can expect a little bit of a pickup, at least when it comes to gold. But with that in mind, it's time for a very quick break right here on Lunchtime Trades. More news and updates on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that
Welcome back. Thank you so much for staying tuned in. Well, it's time now to talk about some of these counters that are in focus right now. So something like L&T in fact stands out, and you do have brokerages also that have come out with a little bit of a bearish call, especially Nomura, and they've also downgraded it to a neutral rating. They've cut the target price as well. Now the stock, of course, is under pressure right now, and you do have about a 3.5% downtick coming in on this particular counter. Now, in terms of brokerage verdict, they're talking about, Nomura specifically is talking about how there's a muted performance when it comes to the fourth quarter, and a little bit of underwhelming guidance also that makes it to their radar. Other than that, they've also cut the FY27, FY28 financial year earnings estimates by up to 8%. Now, they're also less optimistic when it comes to the order inflow momentum, and that's also crucial to take a look at. In terms of valuation, they're talking about how there is less valuation comfort given some of the near-term uncertainties and limited visibility. But with that in mind, let's also move on and get you the word coming in from sources. In fact, sources are telling your channel that Zee has sought an expanded undertaking from Nika in the ongoing copyright infringement case. Nimit Dixit is joining in with all of those important details. Nimit.
Yes, absolutely. So in an ongoing dispute that's been going on since April between Zee and Nika, where Zee has sued Nika for copyright infringement, saying that in its Instagram reels, which we all watch in the ads, whether it's through influencers or its own channel, it's been using music for Zee. Now, Instagram rules say that for personal accounts, that's fine. You're allowed to add a song to your reel. But when it's a business account, then it becomes a commercial use, and that is not allowed. So that copyright violation stands. On the basis of that, they identified 12 different reels, and while now Nika has taken down those 12 reels and removed those songs, but Zee is still unsatisfied with that. What Zee says is that it apprehends that Nika in the future will again use this, so it's not happy with this undertaking. It's asking Nika and asking court to direct Nika to give a larger undertaking whereby it is disallowed from using its songs in the future as well, and it's also pressing for damages to the amount of 2 crores, which is not a lot given the context of the brand reputation here at stake, because this is a larger industry issue that's been in focus for a while, where the use of songs and the copyright associated with them, especially on Instagram and other social media platforms, is in focus. So what we're going to look at on May 26th, when the matter is going to come up again, is whether this larger undertaking will be granted by the court, protecting the copyright and the music of Zee.
No, absolutely, and thank you so much, Nimit, for joining us with all of those important highlights. But let's also talk about some of these FMCG companies that are also in focus right now. So they're in focus on the back of solid quarterly results, mind you. Many are seeing sales growth that is at a multi-year high. In fact, Mahima is standing by. In terms of that explanation for what's working and what's really in store for FMCG, Mahima.
Right, so Shanzi, overall Q4 has been a very good quarter for FMCG companies. A lot of these companies, in the broader end of spectrum, have seen multi-quarter highs growth when it comes to revenue as well as volumes. And largely, if we take a look at the growth, it's largely driven by volumes. Now, if you take a look at the reason as to why these this kind of growth has come in, largely on account of GST cuts that we've seen, plus on account of freebies that the government has been giving to the public out there, and volume-led growth has remained the focus, the centric focus of this earnings, and has remained the past 2 quarters and will remain the focus for going forward as well. Now, if you take a look at the sales growth, the volume growth, and the portfolio exposure of GST, the table shows you as to how that exposure has been. Like for something like Bajaj Consumer, the GST portfolio exposure was as high as 95%, and that's why we've seen good numbers translating because of that GST push. Now, HUL has seen a sales and volume growth at a 12-quarter high. Nestle has seen a multi-quarter high in terms of both sales and volume growth. For Varun Beverage, it was a 4-quarter high sales growth, and for Bajaj Consumer, it was a 20-quarter high revenue growth. Now, in terms of common commentary that we're seeing from the management coming in, all of them have gone ahead and said in the Q1 they are going to see price hikes on account of cost and inflationary pressure because of this West Asia conflict. Headwinds due to West Asia conflict might impact the first half of Q1 as well in terms of the overall pressure in terms of how things fare in terms of margins as well, and companies are prioritizing volume growth over everything. So right now the focus remains on volume going forward as well. Valuations cheaper as compared to where they stand at 5-year average, but still not cheap as compared to where the numbers stand. But overall, ITC being the cheapest amongst the all at 18 times 1 year forward, followed by something like an Imami at 20 times. Now, in terms of return potential, as per what Bloomberg consensus estimates are suggesting, Imami has the highest one at 45%, Varun Beverages and Marico Khaitan at 27%, and GCPL and Dabur at 24%. So this is the overall view of what's happened in Q4 and what should one look at going forward in FY27.
Well, absolutely. And thank you so much, Mahima, for joining us with all of that detailed analysis as well. So there you go. Those are some of the FMCG counters that you should also be watching out for. But let's also shift focus and talk to you about what's on your plate. Rice exports feel the heat. Sources, in fact, are telling NDTV Profit that exporters are seeking urgent shipping relief from the government as basmati export prices surge to close to $1,300 a ton. What's really driving this spike, and what is the industry asking for right now? Let's go back to Nimit. Nimit, it's quite the busy day for you. Rice is on the boil. Tell us why.
Yes, absolutely. So rice exporters tell us exclusively that what they're facing right now is a shipping crisis, not a commodity or demand crisis. They have the goods, they have the rice. India's always been a big exporter. The government has taken some measures, but because of the huge rise in freight, which they say moves from $550 to about $3,000, a 6 times increase. Because of that, rice costs have gone up by about $200 a ton to about $1,300 in some cases. Earlier, it was about $1,100 pre the conflict. When the conflict started, it moved to about $1,200, and now in some cases it's at $1,300, which is a huge increase. Now, what they ask for is not a case-by-case solution as the DG Shipping has been doing. The DG Shipping, they say, has been doing a great job in addressing the concerns, but because these shipping lines are so large, they sometimes take advantage of especially the medium and the small rice exporters, if not the large ones. But what they say essentially is they want a faster rollout of the Merchant Shipping Act 2025, which came into effect last year, but has not been rolled out yet. They also say that this Merchant Shipping Act provides for clear, transparent shipping and pricing guidelines. Now, with this price going up, they also say that freight accounts for 15% of the total basmati export pricing. They're not able to totally pass on this price to all the countries and all their customers in the Middle East, specifically because countries such as the UAE and Qatar limit the price, and they can't pass that cost on, so they're having to absorb that cost. So they ask for quick action and immediate action, as well as a long-term action in terms of policy changes, creating transparent pricing and shipping guidelines, so they have a more arm's length and transparent, predictable relationship with the shippers.
No, absolutely. And thank you so much, Nimit, for getting us that highlight as well. So there you go. That's a key look at the rice prices as well that are quite on the boil right now. But let's move on from rice to tea as well, because you're watching Lunchtime Trades. Let's get you an exclusive chat that my colleague Sharad had with the Lakshmi Group's management. Now, this is a company which is highly focused in West Bengal as well, and you do have the winds of change as well blowing in the state. Let's also go across and listen in to the management's view also coming in when it comes to the entire tea industry as a whole.
Well, yes, we are joined in by Rudra Chatterjee, MD at Lakshmi Group. Good afternoon, Rudra. It's always a pleasure to talk with you. But explain us what we are doing in this room. Of course, a little bit of tea industry buzz is there, but what's it all about?
So we are tasting teas from tea estates in Darjeeling and Assam. There's Adabari here, which is in Assam. We are coming towards the second flush, so this is a very important time to taste teas and understand how the standards are. Lakshmi has been growing tea from 1912. Business started by my grandfather, and today we grow teas in Darjeeling, Assam, Tripura, and also in Rwanda in Africa.
Wow, that's pretty interesting. But speaking of Bengal, there is a big change happening here. The sentiment is quite upbeat. But what are the projections looking like? I'm sure some numbers have been worked out, next 5 years. What is it for Bengal?
So West Bengal is a $250 billion economy. The goal should be to take this to a $500 billion economy in 5 years, which is doubling its nominal growth rate from around 7 to 8% to around 15%. Now, how does that happen? West Bengal has some key areas which could be unlocked. Let's take apparel and home textiles manufacturing. Our sister company is OBT, the largest carpet manufacturer and home textiles manufacturer in India. But whether it's home textiles or apparel, West Bengal has a long history of textiles. So can we create an textiles export business of $50 billion, which is what Bangladesh does? Can we have a plug-and-play system where international brands can come, have SEZ benefits, get best cost inputs? That will be a hugely employment generating, and the skills are there among the Bengali people to be able to do that.
Apart from the skills portion, let's just talk about the sectors, Rudra. Which sectors you think should fire from Bengal?
So apparel is one, which is a $50 billion opportunity. Food processing, which includes fish, fruits, rice. Look at Thailand, which does similar, in a similar geography, does around $20 billion of food processing exports. So creating hubs around South 24 Parganas in the potato belt. How can we export food? This is another opportunity which I think is huge. I think data, having data centers in West Bengal, getting a submarine cable from Singapore, which we don't have today. It is there in Mumbai, there's in Chennai, reduces the data cost.
So it's like a landing station basically.
Landing stations, and improves the data quality, and you can have West Bengal as a data center for the eastern region. Similarly, there are areas like furniture, which is something OBT also does. North Bengal has immense potential in furniture, creating a hub model where you create a furniture, and obviously we would require infrastructure in ports, we would require infrastructure in Kolkata to have the design team. But all of these are large opportunities, which can add up to a significant area. The growth so far has been service-oriented, construction-oriented. We need to get into manufacturing-oriented and export-oriented. And that is what OBT does. In tea, for example, what you're seeing here is, tasting tea. But we package tea, we bottle tea with Coca-Cola, Makaibari tea is sold as honest tea. We do tea extraction. All of those are large tea processing opportunities, which China has been very successful. China does almost 3 times the amount of tea that India does, and most of it is consumed as processed and domestic.
Right, right. And Rudra, apart from this opportunity, since you are a big pioneer in the tea industry yourself, just wanted to understand how this tea industry is functioning in Bengal right now. Is there a revival attempt coming in? Because we have seen a lot of times, at times the tea gardens get sold off, there are some distressed assets, that's what we hear. But what's the ground reality here?
So Darjeeling tea is the best in the world. There is no question about it. We have to not only sell Darjeeling tea as auction and let the rest of the world brand it. We have to sit in Kolkata and brand Darjeeling tea. In a small way, Makaibari has been doing that, but it has to be a much larger effort across the industry. Secondly, Darjeeling is also one of the prettiest places in the world. Creating tourism. There's a Taj in Makaibari, there's going to be an Oberoi in Makaibari. Creating tea tourism at all levels. High and economy levels, creating health education. Darjeeling was not only tea area, it was also a sanatorium. so for healthcare. So we have to reimagine this industry. So Makai Battery was started in 1859. Today we are in 2026. It is not going to remain exactly the same. We have to reimagine the tea industry for the 21st century. We are doing some of it, and it will be private sector led, but it requires the infrastructure in and around Darjeeling. We need bottling capacities, we need SEZ facilities where we can export packaged tea to ensure that West Bengal becomes a hub again of the tea industry around the world.
Aradhan, there you go. So that's a word coming in when it comes to the tea industry as a whole. But that's all the time that we have on the show. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market opening. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew.
Good afternoon. You're watching Small Cap Buzzers on.
Hello and welcome to NDTV Profit. Well, you're watching Small Cap Buzzers, wherein I am your host Varsha, and with me is Somit Sarkar. Talking about what we're going to take on the show, we're going to talk about Knowledge Marine. Well, Somit, what you can say about this company, interesting company,
Well, yes, Knowledge Marine is one counter which looks quite interesting, and we'll be speaking with the management today on the show. And the discussion is largely on their expansion into the shipbuilding unit that they have announced recently. And if you look at the stock, that is also up nearly 31% in the last 1 month. We'll be also speaking about Raymond Reality. That stock has been gaining in trade on the back of strong numbers, which is largely on the back of better collections that the company has seen in the fourth quarter of FY26. Even if you look at the pre-sales growth, that was largely led by robust demand across ongoing and the newly launched projects of the company. When it comes to India Pesticides, that stock has gained nearly 12% on an intraday basis. That is its biggest move that we have seen in nearly a year. And if you look at the volumes, they are nearly 24 times its 20-day average. So strong volumes leading to strong gains for India Pesticides. And lastly, when it comes to SPML Infra, that stock has been buzzing in trade on the back of a landmark deal that the company has announced of close to around 1,128 crore to develop 1 gigawatt of BESS project, that is BESS project, and the project will be executed over the next 18 months, and that is the reason why the stock has been gaining in trade. Now, if you look at the markets, the Nifty, it's not quite a great day, though the Nifty is looking positive, around 40 points up in trade, but from the day's highest point, we have declined by around 100 odd points, and the Nifty is just managing to stay above the 24,000 level, and this is, I believe, the 6th or the 7th consecutive session where we are seeing Nifty consolidating around the 24,000 level. On the sectoral side is the Nifty Energy and the FMCG index, which are in red, while on the positive side we are seeing Nifty Pharma gaining around 3% in trade. But when it comes to the mid and small cap space, both the sectoral indices have been gaining in trade and outperforming the benchmark. Midcap and small cap, both the indices are up around 1.3% in trade. But Varsha, which are those small cap counters that have been buzzing today?
Well, a lot of stocks are actually buzzing, of course, on the back of news flows, earnings, and then you have volumes also. You have Gandhar Oil, where the stock is buzzing on the back of strong volumes. Volumes are trading at 33 times of its 20-day average. You have Finiotex Chemical as well, buzzing in trade today. There you go. The Gandhar is up almost 17%, but Finiotex is up almost 14% in trade. You have Sunflag Iron also buzzing on the back of volumes. Volumes are 5 times of its 30-day average. Shanti Gold is also in focus. Omax Auto, let's pull up that chart also, because in the last 5 days, the stock is up 54%. And today as well, the stock is up almost, in the range of 5 to 7%, if I'm not wrong. But a huge, uptake over here. On the loser side, though, you have Sakar Health, you have, BGR Energy and PTC India Financials. Well, PTC India is under pressure on the back of Q4 FY26 numbers. So these are basically all the stocks which are in focus when it comes to small cap. But one stock, which is in focus, this Knowledge Marine, wherein Knowledge Marine and Engineering Works, wherein they have expanded through acquisition of waterfront land for shipyard, and this acquisition marks pivotal step into shipbuilding enterprise. But to speak more about this, what is the opportunity here and what growth lies ahead for the next 2 to 3 years, we are here joined by Sujay Keval Ramani, who's the CEO of Knowledge Marine and Engineering Works, and Saurabh Daswani, who's the Managing Director at the company. Hello, gentlemen. Welcome at NDTV Profit. The strategic expansion into the shipbuilding enterprise, I believe you already have orders in hand when it comes to shipbuilding, but if you could give us more details on the acquisition of waterfront, and how is the order book looking like?
So thank you for having us today and giving us this opportunity. Presently, the order book in hand for Knowledge Marine, the parent company, is at 1,400 crores. And the Knowledge Shipyard company has an order book of 180 crores, totaling the group's order book at 1,580 crores. The future pipeline for the parent company is at 2,500 crores, and Knowledge Shipyard is at 300 crores, with the possibility of a total group pipeline of 2,800 crores. The reason we invested in the shipyard is we have been doing shipbuilding for the parent company, which is an operating company. And now we believe that cost center can be transferred into a profit center with the experience that we gained over the last 11 years. And deploying the same manpower, which has gained the experience to build for the public and the government.
Right. Okay. Can you just take us through the financials? How much this acquisition has costed you? By when do you expect it to break even? And when will it be EPS accretive?
Yeah, so the project is the total investment. What we are looking is in 3 phases, and it is going to be a total of 300 crores. Wherein the phase 1, wherein we are investing close to 60 to 80 odd crores, is going to complete by September to October this year. The second phase is going to get completed by May, June next year, and the whole facility will be ready by next year, December, and it will be kicking in by that time. However, the current order book, what we already have, should be able to cater with the phase 1, which is going to complete by September, October, as I said.
Okay, and post this new acquisition that has been completed, their setup is completed. How do you see the order win trajectory to go forward for Knowledge Marine, say for FY28 as well?
So, with the shipyard being in the 4th year, the revenue coming in from the shipyard is expected at 1,000 to 1,200 crores when the shipyard is able to deliver between 16 to 18 vessels per year. And with that, in addition to the parent company's top line, we project somewhere around 2,000 crores 4 years down the line.
Right, and Mr. Kewal Ramane, shipbuilding globally, correct me please if I'm wrong, is known for cost overruns and delays. How are you structurally insulating yourself from these kind of risks?
So what I would like to state is we are presently only concentrating on smaller vessels with a length of up to 100 meters and a draft of sub 5 meters. We have developed the expertise in building these vessels in the last 11 years, and the shipyard design is being made in such a way that the assembly line takes away the reasons for cost overruns. And we have learned from the best. And I would like Saurabh to tell you about the team that is coming in to help us with the experience that they've had in the past from the yards around the globe.
Right.
I've onboarded Mr. S. Krishnakumar, who is a naval architect and has been leading many shipyards around Dubai, Singapore, Oman for almost 4 decades. And with him, he's also bringing in a team of more than 3 or 4 people who also have an experience of about 2.5 decades working into these shipyards around the globe in Dubai, Singapore, Oman, who have been into this industry for a long time. So with the new entrants and what we already have, we believe we can have a good team who can actually look after these challenges.
Right. Also, as you are scaling into shipbuilding, how will margins look like? What is the margin profile over there? Because currently, in December 2025, you saw around 43% when it comes to EBITDA margin. But how will margin shape up when the shipbuilding will have a meaningful contribution to your business?
So we, with the past record, have been able to maintain the EBITDA margins between 30 to 40%. Going forward, we think the margins will stay intact because of the way we bid and execute our works. We do not see any reduction or any kind of effect on the margins going forward with the new business as well.
Right. I believe you are also looking for international expansion, but given the recent geopolitical issues, is that plan still on cards? Any developments on that front?
So we are doing technological tie-ups and technology transfer into India and trying to make in India the vessels that we are planning to build abroad first. And now we are focusing on that. That helps us control the cost and still maintain the market share going forward.
You also mentioned active participation in green truck tenders. Have you secured any new orders since Q3?
So we have already secured 2 orders, but in Q3, the bids are still under evaluation, certain bids, and the results should be out within the next 30 days.
Right. And your Q3 was very strong and fantastic set of numbers. But going ahead, maybe, in FY27, what kind of revenue growth are you penciling in? Because in the last 3 years, your CAGR has been around 50%. What is that growth to be expected in FY27 and at what margins? I mean, you said that you will be maintaining at 30 to 40%, but that's quite a broad range. If you could give us the ballpark numbers.
So Q3 was a great quarter for the company. Going forward, we will try to maintain such margins. The upcoming year is also a good year for the company with the orders that we have secured and the orders that are in the pipeline. We have been continuously delivering growth, and we promise along the same lines going forward as well.
And lastly, just one question, given the recent geopolitical issue, given the fact that we have seen an increase in commodity cost, there have been increases in freight cost as well. Any impact of the same on your business in the fourth quarter or in the first quarter of FY27 that you expect?
So we have developed some resilience in the company in the last 10, 11 years, even going through COVID or the present war situation. We have been able to shift our business basis that in terms of procurement, and we are sourcing majorly now from India. And I don't think it will impact the company in terms of deliverables going forward.
Right. Well, thank you, sir. Thank you for joining us and giving us the way forward for Knowledge Marine. Let's welcome in our fundamental guest now, Girish Sodani, co-founder of Ensure Capital. Girish, you heard the management quite a strong, optimistic outlook that they have for FY27 and post the new acquisition that they have done that becomes operational as well. They're quite confident on growth and maintaining margins going forward. How are you looking at this counter the current valuations?
So, actually, we have to think about it first, the sector. The marine sector is a little bit a lengthy process. We can say that the vision is at least for the next 3 to 5 years down the lines. So, come to the sector positions, obviously, any stocks, it will be Cambrew or any other stocks, we have to just think about for the next 2 to 3 years. Come to the expansions mode now, the company have already done a very fantastic expansions to the Vandaman ports. Basically, this completely approaches the highest propositions if we talk about the ancillaries, repairs, as well as the vessel constructions. So the companies are getting a very strong advantage from this particular. And approximately, this is a very strong access positions also, like a 188 meter, completely a waterfront. It's completely based on the 6 meters as well as the strong proposition for the vessel as well as the other development product lines. Come to the strategic developments and the company expansion for the financial year 27-28. We are just looking out at the revenue part would be some around 60 to 70% down the lines, as we saw that the 1500, approximately 1500 crore order books complete in hand by the management. And the single windows, obviously the financial assistance schemes also there by the government of India. So we are just looking out for this particular advantage in the next financial year 27-28.
Right. Well, moving on, time to dive into the F&O market setup and the cues shaping trade today. Let's bring in Puneet for more details.
Well, thank you for that. Definitely a couple of stocks within the Sensex as you're continuing to see pressure on them. L&T is definitely one. But when you move on, look at the individual stock specific action where you're seeing longs being built up. Coforge and SRF do feature on that list. Now, SRF on the back of results, conference call commentary also, has been decent enough, and Varsha, you can deep dive into that. But largely, Coforge also very strong results from the company, has been beaten estimates across brokerages, and some of them actually hiked the target price as well. Shorts being built up on L&T post results as well as on Exide, while longs are unwinded on Hitachi Energy and has seen a consistent one-way move from 20,000 all the way up to 33,000. Seeing some pressure today. Tube Investment is the other one which is seeing longs being unwinded in the system. Finally, short covering seen on Force Motors. Yesterday, the company came out with the new versions of the Traveller, and that is expected to drive another set of growth for the company. While Vodafone Idea is another candidate seeing short covering. Kumar Mangalam Bengla, being the non-executive chairman, could be one of those triggers, but continues to be in focus for the third consecutive day post that relief for AGR. So these are some of the key stocks that we are tracking today.
Well, thank you so much, Puneet, for all the details. Well, moving on, India Pesticides, let's pull that stock up. The stock is up almost, there you go, 7%, though it has come off. But, a lot of triggers working for this company. First of all, this company is expected to post its results, that is Q4 results on 23rd May. And this company is into manufacturing of agrochemical technicals, APIs and formulation business. Technicals and APIs, nothing but the raw material, I would say, the main ingredient, the active ingredient for the end product, which is pesticides and herbicides. So the few triggers that is working for this company, one is of course the margin drivers. Margin expansion has been attributed to better operating leverage, and the ongoing cost efficiencies have supported profitability for this company. Well, onto the export seasonality, export volatility is demand, timing and geographic driven. Q3 and Q4 demand, if you see, is a Australia heavy business. So there the exports, or rather the business from Australia, is expected to have a good growth in Q4, and customers may order in advance or last minute, creating quarterly swings over there. The Shalvis facility, which is the technical scale up, now technical is nothing but the active ingredient used for the end product. The commercial production has commenced at Shalvis, and the block 1 is operational, block 2 is under construction though. A near-term revenue potential from this unit is expected at 80 to 100 crore in FY27. Medium-term plan, if you see, is to add 2 to 3 blocks annually for next 3 to 4 years, and the long-term aspiration is 1,000 crore revenue from this Shalvis unit. Talking about the CDMO CRAMS, I would say the next leg of growth for this company, well, the active engagements with customers in Japan, USA and Australia are being taken. Japan customer is expected to visit again in March, April was expected to visit, but we'll talk more when we speak to the management. Management expressed optimism on materialization in Japan, and the samples were approved in USA and Australia, and was companies awaiting commercial next steps. Lastly, for FY27, well, 20% year-on-year growth is expected, and the EBITDA margins is expected to remain in the 18 to 20% of range. Currently, if you see the EBITDA margins for India Pesticides, well, in Q3 it was around 17%. For FY27, 18 to 20% is the range that they are expecting. Well, Girish, coming to you on this, what is your perspective when it comes to India Pesticides, and of course the overall agrochemical sector, also considering the price sensitivity or the impact of West Asia war as well?
So it's completely talk about the agrochemical now. The sector is completely in a switching to different verticals, just facing the heavy issues from this particular geopolitical tensions we are looking out. But overall, the company's fundamentals are strongly built up. If you talk about for the India Pesticides Limited, it's completely into the recovery stages. If you talk about for the next 2 to 3 years down the lines, we are just expecting the revenue guidance would be 1,000 crores in the financial year 27, and just expecting the targets of around 3,000 crores by financial year 30-31. Come to the profitability, obviously, if we talk about the numbers, the previous numbers, we are looking at the very first inventory for the 23 to 24% CAGR growth in the financial health we are looking out. In the term means operational pivots, turnover metrics, as well as the completely demand and supplies. Right now, the project lines was very strongly built up. Right now, so we are just looking out the order book stand would be some around 4,500 crores in the early financial year 2027. So come to the completely a background into the Indian pesticides. We are looking like that if you having a hold of around 2 to 3 years down the lines, obviously the pesticide sector is completely looking out for the very attraction film.
Well, yeah, okay. Well, moving on, Raymond Reality. Let's see what that counter is doing, because that counter is buzzing on the back of, there you go, on the back of Q4 numbers, almost 18%. But, let's bring Mahima to give us details on why Raymond Reality had a very strong quarter.
Right, so Varsha, if you take a look at the numbers, right, revenue saw an uptick of almost 51% at that 1157 odd crores versus that of 766 odd crores. EBITDA saw an uptick of almost 49%, almost in tandem with the revenue growth at 253 crores versus 170 crores. Margins stood at 21.5 versus that of 22.1%. Slight downtick in margins because of probably raw material inflation, largely on account of the West Asia conflict, and net profit saw a growth of around 44%. Now, in terms of the operational metrics, the recorded pre-sales stood at around 1519. In Q4 itself and FY26, the overall number of was 3,023 odd crore. So almost half of the pre-sale has happened in Q4, and that's probably reflecting in the numbers as well. Q4 pre-sales has shot up by 139%, and that's what is probably something that the street is liking. The collections, of course, saw a moderate growth of 4%, which is not, which has not been the case for a lot of real estate companies. The collections have grown much faster for real estate companies this quarter, but that's not the case for Raymond Realty. Now, in terms of launches planned for the year of 26-27, 2 new projects on own land in Thane and 2 new JDA projects in Mumbai are on the way. That's the 4 projects that the company is working on in JDAs. And in terms of outlook for real estate, they are targeting up 20 to 25% growth in booking value. Future expansion will happen through capital light model, aims for 25% of margins and revenue to go to 4,000 to 4,500 crores in the next 3 to 4 years, and focusing on mid-size and premium segment right now. So this is the overall view of what's worked for Raymond Realty and why the stock is buzzing.
Right. Well, thank you so much, Mahima, for all the details. Girish, what's your view on Raymond Realty, considering the huge run-up that we've seen today, almost 18%? What would you advise to investors, number one? And number two, apart from Raymond Realty, any other stocks that, in the realty sector that you like?
So come to the Raymond Reality now. Obviously, it's a little bit of run-ups right now, so not fresh allocations as of advisables. If you're getting a chance of around 500 or 510 or 515, so the view was completely based on the next 1.5 year. The reason behind it, there's so many shifted out there, so completely in the revenue shifts as well as the MMR focus. The completely now the 4 new projects lines to be shared, as well as they are just reshuffle their structuring for the direct allocations as well as the 50% JDI, joint development activations. The strong land banks. So completely overall the Raymond Reality looks very fundamental. But if we come about for the next, for the other real estate companies, so the micro Lodha is looking out very attractive right now. We are just expecting that the 16 to 17% year-on-year growth we are just expected, as well as the stable portfolios right now, and the land banks we are just expecting by 30-35% by the financial year 27-28.
Right. Moving on to SPML Infra, that counter has been buzzing on the back of a strong order win. What does that mean for the company? Let's get in Shivam with more details on the same.
Well, yes, SPML Infra is an infrastructure development company with a diverse set of business segments, including power transmission, and the stock is up around 3.5% in today's session and has touched 5-month intraday high. Now, the stock is buzzing on the back of receiving the contract, which is worth 1,100 odd crores, and on this, the company will develop a 1 gigawatt battery energy storage systems at Barauni Thermal Power Station, which is operated by NTPC in Bihar. Now, this project ranks among the largest single BES orders that has been awarded in India, and for company it is also significant, as this will mark the first large-scale grid battery energy storage systems for the company. Now, this project is going to be executed over the period of 18 months, followed by 15 years of operation and maintenance. And looking at the recent developments, that the board of the company has also approved a fundraise of around 190 crores through warrants and equities. Now, the board has also approved increase in the capex of from 176 crores to 238 odd crores, which is aimed at supporting the expansion of battery energy storage system capacity from 2.5 gigawatt to 5 gigawatt per hour. Now, looking at the financials of 9-month FY26, the revenue has declined a slight bit, while the EBITDA was up around 25%. The margin stand at 10.4%, while the PAT has increased by 27.7% on the back of lower operational expenses. The total order value of the projects, including this new order that has been secured by the company, stands at 5,452 crores. And looking at the stock performance, the stock has given a positive performance in 1 week, 1 month, and year till date basis.
Right. Girish, any view on this counter SPML Infra?
Looks like as midterm fundamentals stocks as well as the company come into the expansion modes also. Just BESS capacities is going to be expanded by the 5 gigawatts per hour. So the along with that, a new manufacturing unit also there. There's a capex of around 230 crores. And just looking out for the overall structure in this particular segment itself, if we talk about the order books like a Jal Jeevan as well as the NTPC's order also. So we are getting a strong order books in this particular segment itself. So further seeing all the scenarios, looking out at the stock fundamentals are looking very attractive, but not at this current levels. I'm just looking out for the some reduction will be there at the near terms. And then if you talk about for the next 1.5 year time, then it looks very attractive.
Well, thank you, Girish. Thank you for joining us and giving us the way forward and your perspectives on the stocks that we discussed. Well, with that, it's a wrap on this edition of Small Cap Bazaar. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market opening. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a
Hello and welcome. You're watching us Profit the Afternoon edition here at NDTV Profit. I'm Mahima Vacharani, and with me as always is Puneet Zaveri. And before we start digging into all your stock related questions, let's take a quick look as to how the markets are doing. The Nifty 50 right now is trading around 0.3% higher, but fallen off from its day's high point most certainly. Started probably highest at its day's high point, but right now trading around that 0.3% mark. Off from its day's low point as well, but a 140 odd points downtick is what we've seen from the day's high point. The Bank Nifty is doing better than what the benchmarks are doing right now, especially the Nifty 50 is up 0.8 odd percent, and 54,900 levels is where it's hovering. That's with regards to the Bank Nifty. Let's pull up the Nifty 50 heat map and see as to what are the counters that are putting pressure. You have L&T which is seeing a downtick of around 2.6% on the back of the numbers. You have ONGC, Reliance, Power Grid. So heavyweights putting that pressure. Reliance almost down 2%, ONGC down 2.4% as well. Power Grid, Titan are some of the other names which are not doing particularly well. But on the flip side, you have Dr. Reddy's, which is shining in trade today, up 3.7 odd percent. In fact, pharma as a whole, pack as a whole, has been doing very well since the past 5 or 7 odd days. Trent is something which is seeing an uptick of around 3.7 odd percent. Tata Motors, Interglobe Aviation, Asian Paints are some of the other names which are also doing fairly well in trade today in that range of 2 to 3% each. Let's quickly pull up the sectoral heat map and see as to what sectors are doing right now, and as to what the sectoral picture looks like. You have pharma seeing gains of about 2.6 odd percent, followed by realty, which is up 1% as well. Metals also doing fairly well, up 1%, and your auto pack is also doing fairly well. FMCG is where the pressure really is, down by about 0.6 odd percent, and you have Nifty Energy, which is also seeing profit booking down by about 0.5 odd percent. So that's with regards to where the sectoral picture goes, but also the advanced decline ratio to help us understand as to what the broad end of spectrum is doing. Both the mid-cap 150 and the small-cap 250 doing fairly well, and that's indicated in this advanced decline ratio, Puneet, because almost more than 2:1 ratio is what we're seeing.
And that's healthy to see at this point of time, right? Because we've seen the broader markets actually doing much better than the benchmarks. Benchmarks continue to have that selling pressure. 24,300 we touch, and we're now back again in that contractionary zone in that sense, and that's visible on your screen right now for the broader markets. But the BSE 500 also puts in perspective some key ones in terms of what's moving in trade today. Embassy Development continues to be up 20%. Shoppers Stop is a surprising one because results weren't too great, but Spark also up 14%. Delta Corp up 13%. Alkyl Amines up 10%. So actually from the morning show, there has been gains being built into a lot of these games, and Coforge is also one of them, up 9% on the back of results. On the losers though, you've only seen KPIT Tech on the back of results now that is under pressure, and Exide also is down in trade today as well. But before we start taking all your stock related queries, an important update that we want to put through, because rising input costs, especially in the textile sector, are now beginning to flow through the apparel companies. Now with over half the increase already passed on, sources are telling NDTV Profit that further price hikes are expected in the coming months. And my colleague Ridhima is now joining us to give us all those details. Ridhima, over to you.
So textile industries are now putting their input costs, they're going to give it to the apparel industry as per the textile and garment industry sources. Now further input costs could be fully passed on to the textile industries. So right now due to this pass on, the cotton prices have risen by 7 to 8%, whereas synthetic garment prices are up by 15 to 20%. So apparel companies are already thinking of passing on this to the customers. Some of them, the smaller apparel companies, have passed on 4 to 5% in May, whereas the bigger apparel companies are still in a wait and watch situation before they pass on the hikes, as they have more capacity. And now stocks in focus include Trent, Aditya Birla Fashion and Retail, V-Mart, V2 Retail and Bazaar Style Retail. Now this price which will be put on the customers, that will be reflective only in Q2 FY27, and it's a wait and watch situation when this price hike exactly happens for the companies, and when the bigger companies sort of take a lead and set the trend.
Thanks so much for that, Ridhima. So continue to monitor all these trends, and we'll start very shortly with the stock related queries as well. Let me welcome in Kunal Shah, Senior Technical and Derivative Analyst, and Mirai Asset Sher Khan for the same, and we'll be joined by Chakri Lokpriya on the fundamental side of things too. Kunal, very good afternoon. Thanks so much for joining in. Let me take the first query now with you on HCL Tech actually, and our viewer Shanta Murthy from Bengaluru is holding 50 shares right now of the counter at almost 1400, currently sitting on a loss of almost 27,000 rupees. Is there any kind of indication, because the fundamentals have been quite weak in this quarter for HCL Tech? What's your view on the stock now?
I think overall for the stock specific for HCL Tech, I think already we have broken the critical support zone. So from a short to medium term perspective, the view continues to remain negative. Any bounce if you get into the stock, since it is trading in the oversold zone, again utilize that as an exit opportunity. We might see the stock sliding down further towards the mark of 1120.
Okay, all right. The next one that we have is on Tenneco Clean Air. Arvio Shankar from Bengaluru is asking if buying at the current price makes sense. He's planning to buy around 100 shares. We have Chakri joining us now. Chakri, a very good afternoon to you. Your view on Tenneco Clean Air?
Tenneco, sorry, I don't invest in the companies, so I don't know much.
No worries. Kunal, do you think there's enough data on the charts to give some perspective?
I think not a level to buy at the current levels. Already, if somebody has bought and continue holding it. But currently, I think the stock is already overstretched on the technicals. Might see some profit booking in the coming days.
And most certainly one of the big beneficiaries of Mahindra as well as the 7XO model getting upsold because of the suspension system that Tenneco had provided. So when you look at the year-to-date chart, also you will see a sharp up move of Tenneco Clean Air on the charts. Let's try pulling that up very quickly. There you go, 27% from the lows for almost 492 as well. Recent listing though, so but that's a key perspective on Tenneco as well. But Sriram Raghuram from Chennai is holding on to 50 shares of First Source Solutions, bought at 105. Now he bought it back in May of 2022. So he's doubled his money in the last 4 years and held on to it. So very kudos to you, Sriram. But Chakri, do you track First Source by any chance? The results came recently, actually just an hour ago, and have been accepted well by the markets, looking at the 5% up move. But any view on this counter?
Yes, the results are good. And, as a company, I think it's well positioned in both the outsourcing bit of the business as well as their organic growth. I think they'll continue to gain traction. So I think it's worth holding on to if he's a long-term investor.
Okay, the next one is KPIT Tech. Ambika from Chennai is holding 250 shares, bought at the levels of 650. Wants to know if she can continue to hold this from a long-term perspective. What's the long-term view on the on this particular counter, Chakri?
KPIT, along with the rest of the IT companies, is going through a massive reset of growth expectations. So that uncertainty will weigh on the stock. So maybe it's a good time to take some money off the table.
Chakri, did you have a view on the results today as well, or that just continues to be the momentum in terms of on this counter?
The results have continued to show the fairly muted overall environment which is plaguing the whole sector, and manufacturing IT, for it to pick up, is still quite some ways away. So I think it's therefore from that perspective it would be good to take some money off the table.
Fair point, Chakri. But the next question now on Jubilant Pharma. Our viewer has bought 50 shares, bought at 440. And this is Sriram Ranganathan, who's from Chennai, asking about a recommendation on this counter. Let's pull up Jubilant Pharma, now up at 955. So he's also doubled his money here. But Chakri, it's been a counter that's been missing in that sense in terms of momentum over the last 3 to 4 quarters. Would you say that he should continue to hold on given the attractive buy price, just 440?
The answer is, clearly there's nothing like taking money off the table. The growth has been kind of, languishing lately. And, so therefore, the expectations, the earnings expectations, momentum are likely to slow down for the business. From that perspective, that's why I recommend taking money off the table.
Okay, we've got Anjali who's calling us from Hyderabad now. Anjali, a very good afternoon to you. I believe you have a question on Sumitomo Chemical.
Yes, ma'am. Good afternoon to you, ma'am, and all of you. Yes, ma'am. I'm having Sumitomo Chemical 200 quantity at the price of 550 average. So,
Anjali, I wanted to understand as to what is the time period that you're looking at for this particular counter?
6 to 8 months, ma'am.
6 to 8 months. All right. Then I'll take this up with Kunal. Kunal, your view on Sumitomo Chemicals?
I think recently the stock has witnessed a sharp recovery from the lower levels. 480 was a decisive level which we have taken out in today's trading session. So this move can extend since he has a 6 to 8 month perspective. I think continue to hold the stock probably around the buying price or a bit above. You might get an exit point for the stock. Overall, the larger term trend for the stock continues to be sideways. Utilize this opportunity where you'll be getting a move towards 500, 550 on the upside as an exit opportunity.
Got that view, Kunal. And viewers, you can also call us for stock-related queries as well, as we have our experts here who will answer your questions. So, before we start, of course, the rapid-fire session, it'd be good to get your calls in. But the next question, Kunal, also on MTAR Tech. This one's been in its own zone here, Kunal. What would you recommend? It's a good target. That's also a question coming in from Chennai, because now at 6,200, Does the momentum still continue?
I think definitely time to take money off the table for MTAR Tech. Any bounce, even if you get from these levels, also utilize that as an exit opportunity. Clearly, we have seen a very sharp rally on the upside. Even on the larger time frame from the technical perspective, everything is in the overbought zone. So you might see soon a correction coming into the stock.
Okay, the next one is on Titan. Vijay from Chennai wants to know the short-term target on this particular counter. Kunal, I'll stick with you. What are the charts suggesting for Titan?
The Titan has been losing some momentum in the recent times. Already it has seen a sharp rally on the weekly charts. There has been a negative divergence on the stock, and the stock has been making a new high, but your momentum indicators are weakening. So clearly, again, for Titan also, my recommendation would be to pull off the money from the table. You might see some correction coming towards the lower end of 3,900.
Got it. Well, the next is an interesting question from Prashant, who is also a regular viewer of the show. And Chakri, he was watching our show, Ask Profit, earlier on, and he had asked that, you'd earlier recommended Uno Minda as one of the counters for a long-term view. Would you recommend even entering this space, this stock right now for the next 1 year?
Uno Minda for the next 1 year or more, definitely yes. As a company, it's facing, along with the industry, shorter-term issues in terms of order momentum because of the export revenues are being somewhat impacted because of the current geopolitical, but for longer term, yes.
Okay, all right. So that's the view coming in on Uno Minda. The next one that we have is coming in on JNK Bank. Our viewer, Sabita from Hyderabad, is holding 100 shares at the levels of 121, wants to know whether to hold or exit this counter. Kunal, your view on the charts for JNK Bank?
I think if she's holding from a short-term perspective, then definitely take some money off the table. But if she has a bigger horizon, say 5 to 6 months perspective, then probably one can continue to hold. The stock can extend towards 155, 160 on the upside.
Got that view, Kunal. We also had the management today at 10:30 where they spoke about how FY26 was kind of flattish, but expectations are higher from next year as well. But take across another caller from Vijayawada now. Aruna has a stock query for us. Aruna, good afternoon. What's your query?
Yeah, good afternoon, sir. I'm having Oracle Financial Services, OFSS, 100 quantity of 8,300 average.
Okay.
So what is the long-term and short-term view on this? If I want to sell, what is the point to sell?
Got it. Well, Aruna, firstly, good on you to buy it at that price, just on an up move, and good to get those gains of almost 1.4 lakh rupees. But Kunal, this counter has seen so many queries that we've gotten on this one. From 6,200 on, the rally has gone all the way up to the current market level. Do you think it has more legs, or should Aruna book out her profits right now?
I think continue to hold the stock. 9,600, 9,800 has been the rejection zone earlier, and we have tested those levels on the higher end. Now already we have seen a sharp rally, so there could be minor pullbacks that would come in. But overall, I am expecting, since the uptrend has been very strong. So again, this is a new leg that has started into the stock. We can expect this move to continue towards the mark of 10,200, 300 on the upside.
All right. Okay. The next one is on Godrej Agrovet. Our viewer, Sanket from Delhi, has been holding 807 shares at the levels of 605. Wants to know if he can continue to buy more, keep holding on whatever he has. What should be the future prospects for this one is what he's asking. So Chakri, I'll come to you on this one. Your view on Godrej Agrovet?
Godrej Agrovet is a very slow growing company, and the sector is subject to a number of vagaries. And there are also, every once in a while price controls that can come in. So from that perspective, I wouldn't really add on, but wait for a better price because valuation is still okay.
Okay, all right. We've got Pradeep who's calling us from Bengaluru. Pradeep, a very good afternoon to you. Go ahead, ask your question.
Very good afternoon, Mahima. See, I am having 100 shares of Goldium International. Bought at 144 rupees and 100 shares of Salzer Electronics bought at 340 rupees. Now, I wanted to sell one of these shares. So, which I should sell and which I can hold?
Sorry, you said Pfizer, right?
Pfizer.
Which is the other counter? Pfizer, correct?
No, not Pfizer. Salzer.
Salzer. Okay, Salsa Tech. Okay, Salsa Tech. Okay, understood. All right. And when you bought this, Pradeep, was it the charts that you saw for both of these?
I am a long-term investor.
All right. Okay. Got your question then. And you want to book profits in one of them. Is that understanding correct?
Yeah. I wanted to know which I should book profits and which I should hold.
Okay. Got your question. I'll take this up with Chakri then. Chakri, Goldium International is one counter that he's been holding. The other one is Salsa Tech. Which one do you think has more potential to grow further, and which one should he book profits for?
Both are good companies, but if you have to take one off the table, I would go for Goldium. Salz Electronics has a number of triggers coming in the next couple of quarters, business triggers, and therefore worth holding on to.
Got the view, Chakri. But the next question from Uma from Bangalore, and this one's coming, Kunal, towards you, because she's had an open-ended question on the solar industry. She wants to play this theme via the charts, but for a slightly more time frame compared to the near term. Anything that's on your radar right now within the Wari is the Fujiyama Power, because we've seen a bunch of new listings and a few existing one like Premier Energies amongst others. Anything that you like in the space now?
I think recently we have seen a good dip in Vari, and I think that's a good buying opportunity. Again, it has come to that demand zone from where we had seen the previous rally which has started. So again, the risk to reward ratio seems to be favorable. So one can go long over here, can probably expect targets of 3,500 on the upside. Also UTL Solar, which is Fujiyama. Again, the rally has been very sharp from the lower levels, but recently we had seen a dip. Again, that dip has been bought aggressively. So again, this can also extend the move towards 310, 320 on the upside.
Okay, all right. It's time for a rapid fire round. Kunal and Chakri, try to keep your answers as short as possible. The first one is from Subramaniam, who's writing us from Bengaluru. He's holding 1,000 shares of Vodafone Idea, bought at the levels of almost 17 rupees. He wants to know if he can hold or sell from a long-term perspective. Chakri, your view?
Very difficult to call, because a huge amount of debt. So therefore, I'd rather sell the stock.
Mr. Reddy is holding on to Aeroflex at 167, Kunal, and he's holding 3,000 shares. So he's in quite a lot of gains at this point of time. Would you recommend him to book partial profits, continue to hold?
Yeah, book 50% and continue to hold the rest.
Silchar Technologies, from a slightly long-term perspective, Kunal, your view on the charts. Kalyani from Telangana wants to know.
Sorry, I'm not able to find the stock.
It's Silchar, S-I-L-C-H-A-R.
SIL, right?
Yes.
Sorry, I'm not able to find this.
By any chance, any view on this one, Chakri?
No, I don't know this company. I'm sorry.
Sure.
The next one, coming in now, it's from Shankar, who wants to know a quick view on NTPC Green, where he's planning to buy 500 shares. Would you recommend that, Chakri?
NTPC Green, clearly yes, because long growth potential ahead of it. Valuation is okay.
Canara Bank bought at the levels of 161. 2,000 shares what Arvind has bought. Wants to know 6 to 8 months view on the counter. Kunal, your view?
I think the view continues to remain bullish on PSUs from a short-term to medium-term perspective. Continue to hold the stock.
Shrikanta wants to is holding 200 shares of Avanti Fee. He's not mentioned the price, but Chakri, space has seen a massive re-rating, but a very big opportunity. Would you still continue to hold?
Yes, clearly this is the time to hold the stock. Huge amount of re-rating is possible.
Okay, Federal Bank, is this the right price to buy? Chakri, this question is directed towards you. Anil Singh is asking.
Results are okay. Banking as a sector is fine. Federal Bank strong, good results. So I think worth holding on to.
Kishore from Hyderabad is holding on to Tejas Networks, bought at 413, and he's holding 150 shares. Now, he has a long-term view, Chakri, of 18 months, but should he continue to hold? It's been a very volatile counter, right?
It is a volatile sector, but stock and worth holding on to. Long-term potential is very good.
Okay, TCI Express bought at the price of 732. 212 shares is what Rashmi has been holding. What should she do next? Kunal, your view on the charts?
And continue to hold.
Ajay Agarwal has LTM 150 shares at 5,500 here. So he's in a loss right now, Kunal. Should he average down? What do the charts suggest?
I think no, definitely not averaging it down. In fact, utilize pullbacks as an exit opportunity.
Orion Pro Solutions bought an average price of 886. 24 shares is what Suman from Kolkata is holding. She wants a 3 years perspective. Chakri?
Yeah, I think from a 3-year perspective, I think there is some amount of leeway, so worth holding on to.
Brigade Enterprise, is it a good time to enter this counter now, Chakri?
Yeah, I think real estate as a space will do well after all these geopolitical issues are kind of settled. So it's a more a longer term play.
Okay, TCS bought at the levels of 2730. Average or sell? 5-year view on this one, Chakri?
There are enough headwinds now, so I would rather sell the stock right now.
Sigachi Industries bought at 43 by Madhu Babu, and he's holding 1,000 shares. Now, it's been a very volatile counter, Kunal. Should he continue to hold down? What's your opinion?
Sorry, which counter?
Sigachi. Let's pull up the 1-year chart also as Kunal goes through it. Very volatile. I think there was a fire incident also at the company. But any view here, Kunal?
I think again, utilize pullback to exit the stock.
Got it. Well, that is the end of the rapid fire as well as this edition of Fast Profit. Chakri as well as Kunal, appreciate your time and your inputs on a whole bunch of queries. With that, we've reached 90 queries for the day, including both the morning and the afternoon edition. So thanks so much, viewers. Of course, that's 54 queries of the morning. And Chakri as well as Kunal have helped us solve almost 36 queries in this half an hour of the show. But thanks so much for watching. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No.
Hi, thanks so much for joining in. You're watching India Market Close, and take a look at this. What more has to be said? We've bounced from the low point of the day and we're currently well above what we started off at the high point of the day and climbing further. This is the benchmark Nifty 50, and the broader markets are also moving in tandem. So pull up the Midcap index while we're talking about this. It is at the high point of the day, 1.6% higher. Let's pull up the small cap index as well, and it's gaining about 1.6%. What is occurring? Let's pull up the Bank Nifty to see if it's showing a similar up move, because you have the frontline banks that have gained quite considerably. In fact, it is trading with gains of about 2%. Pull up the heat map for the Nifty 50, because this is a very sharp move, and you're seeing a lot of stocks that have moved from the low point. If you watched the show this morning, you would have seen that there was a considerable amount of red on the screen. That has changed quite considerably. And you have Indigo that continues to rule the roost. It was one of the top gainers in trade in the morning, but you have Dr. Reddy's Laboratories trading at the high point of the day. You have Tata Motors, PV, Trent, etc. that are doing well. But you will see the banks. Axis Bank is up and about. You have SBI that is up and about. HDFC Bank with gains of about 2.3% or thereabouts. And you should see ICICI Bank as well with considerable gains of about 1.5% as well. So the heavyweights on the benchmark Nifty 50 are really pulling ground today. Pull up the contributors chart just to drive home this point. And right on top of the screen, you have HDFC Bank and ICICI Bank, followed by State Bank of India and Axis Bank. 5 banks that are leading the gains and contributing a chunk. But don't forget this, because if you take a look at the 190 points that is being contributed by the rest of the pack as well, then this is a very strong up move. Quite a considerable amount of this is being led, as you've seen, by the banking index. Reliance Industries on the downside, Larsen & Toubro reacting to a certain extent to the outlook for the first half, which the company itself has said is going to be a little soft in the current context, is losing a little bit of ground. ONGC, Infi are the other drags, but not too much in the way of big losers for the Nifty 50 at the very least. Let's talk about the heat map for the sectoral indices, because you will see a large amount of green. Of course, this was the case in the morning as well when we opened up. In fact, if anything, you have a little more red on the screen than you did at the start. But you have the pharma index, PSU banks. This is an index that has been underperforming in the recent past, and we were talking about the possibility of the Nifty Bank breaking past the lull that it has had, and that up move and that trigger that you had this morning with regard to the guarantee scheme that was announced by the government seems to be the trigger that these banks needed. So the PSU banking index is up as much as 2.5%. You have the Midcap index that is up and about. Realty is doing particularly well. The Nifty Bank is up about 2.3% or thereabouts. You have Auto as an index that's doing okay. The Midcap index is up about 1.8% or thereabouts. The Nifty Metal index as well, up about 1.5%. What isn't doing well on the downside is actually the FMCG index and the CPSE index, both of which are losing less than 0.2% each. So what are the factors that are at play right now? You have had holding on of 24,000 for a while. We're well above that, in fact. at this moment, and a consolidation in the range of 23,800 to 24,300. You've seen value buying that continues in small cap as well as in mid cap, and the broader markets have outperformed the benchmark. That continues to be the case. But the late move that you've seen in the benchmark Nifty 50, we'll have to see where it ends up. The top sectoral gainer for the fifth session is pharma. All constituents or most constituents trade in the green. The Nifty Bank is actually seeing support at 54,600 for the second straight day, and the major resistance is at 55,600. I just want to pull up the intraday chart for the Nifty 50 again, because while we were speaking about all of this, it continued to climb, and it is trading 283 points higher above what has become a very critical resistance level in the recent past at 24,300. So the question to Nilesh Jain, who's joining me right now, of Centrum Broking, is with the blitz that we're seeing right now, Nilesh, and there's no other way to describe it. It's a blitz, and we've run very quickly to that 24,300 mark. What are the fresh levels that you would look at for both the benchmark Nifty 50 as well as the Nifty Bank, which seems to be in a tearaway hurry today?
Very good afternoon, Alex. Absolutely a very strong rebound that we have seen today. I think it is more sort of a giving confidence, because now today the Nifty has taken support exactly at its 21 as well as 50-day moving average. So cluster of support at today's low somewhere around 24,050. And from now here on, we are expecting a move towards 24,500. So another 200 point uptick is something that we can expect in a very short-term time frame. So it's a buy and decline now. We are getting more confidence because the volatility index in India is cooled off sharply by 6% today. And for the first time after a long time, it has slipped below 17. So that is another thing that is giving more confidence. Coming to the Bank Nifty, after long underperformance over Nifty index, finally it has shown a big outperformance over the Nifty index, and also making an attempt to cross 56,000 as well. That's the 50-day moving average for the Bank Nifty in the spot level. So overall, Bank Nifty also looks strong for 56,500 to 57,000. So we are expecting a gradual uptick to continue towards this 200-day moving average that is placed somewhere around 57,200. So that will be the next target in the May series that we can expect. So both Nifty and Bank Nifty look strong, but yes, broader markets are looking more stronger than the benchmark indices. Midcap index is merely few hundred points away from a new record high, and the kind of rebound that we have seen in the small cap index, that is also giving more confidence. So overall, it looks like a broad-based buying that we are witnessing, and it is likely to be a sustainable one.
Just as we're speaking, the peak has been found, and it's just gone a slight bit below that peak, right? So we've broken below the 24,300 mark for the benchmark Nifty 50. But your point on the broader markets is well made, Nilesh, because if you look at April as a whole, then you see 17% gains for the small cap index, about 13% for the mid cap index or thereabouts, and you built on that in the recent past with an outperformance in the broader markets, right? So there you go. So 1 month, of course, does not capture all of April, is up about 15.5%. But let's talk about individual stocks, and I did not bring you those. As I look at the 500 stocks of the Nifty 500, there are just over 100 declines. But the key gainers, let me highlight those for you. You have Alkyl Amines, which is doing particularly well. You have Wockhardt, you have Valor Estate, you have Coforge, that is reacting to numbers and continues to gain ground. You have Tejas, you have eClerx, and you have SRF, which is our selection for the stock of the day, and we'll come to that in just a bit. Among the key losers, you have not too many in the way of very, very big losers. You have Schneider Electric, that's losing about 5%. You have Vardhman Textiles, you have KPIT Tech, Ather Energy, all losing over 4% and less than 5%. You have Credit Access, that is seeing a little bit of money being taken off the table after the sharp rally that it saw in the recent past. But I've listed out several stocks for you, Nilesh. Is your pick for today among those, or is it separate?
Well, Alex, a very good setup across the broader markets we are witnessing today. So slightly different set of stocks that I have. First of all, within Pharma Pack, we have seen a very strong momentum. So we are very much constructive on pharma space. Mankind Pharma, this particular counter has given a very good breakout today. In fact, yesterday as well, we have seen a very good setup. Today, on derivative front, we have seen 4% OI addition as well. So we are getting more confidence on derivative front as well. With this kind of a breakout, we are expecting a follow-up more on the upside towards 2450 to 2500. These are the two targets on the upside. And 2295, somewhere around today's low, will be the stop loss. So Mankind Pharma will be first preferred bet. Apart from that, if you see the other stock that we are liking is Shriram Finance. So NBFC space will be another space where we may see the momentum coming back. So Shriram Finance, we are bullish for upside target of 1020, 1040 with a stop loss below 978. Shriram Finance is also a buy. And lastly, one more counter that I have is MCX. So Bombay Stock Exchange is trading at all-time high, and MCX is likely to follow that momentum on the upside towards 3200. That's again a positional target. So one can keep a stop loss below 2900, and MCX is also a buy.
Now, of course, at this point, it's conjecture as to why the market is rising as much as it is. But there is a possibility that a news report that was put out just 16 minutes back, from what I can see, by Axios about the US-Iran conflict could have had a bearing in turning the tide. Because if you look at the intraday chart for the Nifty 50, you will see that that big spike took place about 20 minutes back. Now, what are they saying? And it's a pretty simple update for you. There is a possibility that the White House believes that it is getting close to an agreement with Iran on a one-page memorandum of understanding to end the war and set a framework for more detailed nuclear negotiations. They have quoted 2 US officials and 2 other sources that have been briefed on the issue. It must be stated very clearly that NDTV Profit or the NDTV Group don't yet have any confirmation of this story, and therefore it is not verified. The feeling at this moment is that the market could be reacting to the possibility that the US-Iran war, the tensions might be dissipating. We just had Brent crude on the screen right now. Let's pull those up again, because earlier today they were already reacting, or rather last night, crude oil prices were reacting to an update by President Donald Trump that said that Project Freedom would be put on hold in the near term, for a little while, because there is significant progress that was made, according to him, in the talks with Iran, and they were moving to a conclusive agreement. So Brent crude now trading lower by as much as 6% at 103, 103.5, and moving lower very, very quickly. I just want to also pull up the rupee if we can. And if we can pull up the exact rate as things stand right now, you will also see a sharp reaction in the Indian rupee. Remember, for the rupee and the chart that you're seeing on the screen, down is good. That means that it is appreciating against the US dollar, 94.68 as things stand right now, and a pretty sharp move, a 0.6% move for the USD INR pair in a day is a pretty sharp move. Nilesh, if you have a view on crude oil prices or the Indian rupee, if you can step in and perhaps give us a check on either of those two.
Right, Alex. So we have been tracking both the commodities. So first of all, USD INR, if you see, it has formed somewhere kind of a double top pattern on technical front, where 95.30, 95.40 has acted as a very strong resistance. And it has also gone into extremely over territory. So this kind of a profit taking was very much likely. So we may see further retracement to continue on the lower side towards 94.2 to 94. And it may test its 21-day moving average that is placed at 93.81 in the best case scenario. So overall, as of now, at current level, we expect some bit of profit taking to continue. So rupee may appreciate further. Now coming to the Brent crude, similarly, we have seen multiple tops at $120. If you can pull up last 2 months chart, you can clearly see at $120 to $125, that was a strong resistance zone. Multiple tops can be seen at that particular range. So now we are expecting a follow-up more on the lower side to continue towards 102 to 100 and in fact $100 is something that we may see going forward. And if it breaks below $100, then next target straightforward could be at $90. So that will be further positive development we may see going forward, provided it should break $100 support on the lower side.
Sequence of events that you need to pay attention to all of this week. We've been focusing more on geopolitics than perhaps when you saw that bit of a lull in the conflict between Iran and the US. Earlier in the week, you had news of certain drone attacks and certain increase in tensions. And subsequent to that, you had statements that were made by Iran officials as well as the US. Iran, for example, talking about the fact that it believed that the US should not be drawn back into a conflict. Remember that this took place just a couple of days back. And since then, you had Project Freedom that was announced. It was said that the blockade would remain in place, but the US would help vessels that were stuck in the Hormuz Strait to get through and to pass through. The latest update, of course, last evening was that Donald Trump announced that they would put Project Freedom on hold. There was also a statement made by other officials of the Trump administration saying that a deal could well be nearing closure. And of course, Pete Hegseth, talking about the fact that the truce was very much continuing between Iran and the US. The latest, of course, is an update from Axios. Remember, we've told you that this is not confirmed. It is a source-based report quoting multiple sources of the US administration and White House saying that there is a possibility of a memo or of a one-page document and an agreement being signed by the US and Iran. Devin Choksi joining us right now to talk about the markets and everything else that is happening. Devin bhai, thanks so much for taking the time. We're sticking with this geopolitical story because it is the biggest story as things stand right now. Between 16 and 20 minutes back, there was this report that came about saying that there is a possibility of a deal between Iran and US very soon, and the markets have really zoomed from that point. Would you buy into this, or would you hold out and wait for an official announcement to come through?
Yeah, Alex, good afternoon. Well, I think the deal is definitely going to be taking place. How soon, how fast, and in what contours I think this is going to happen, I think is something which is a subject matter of guess. And that's where probably I think the market is either excited or nervous on a given day. Today, I think what I would like to think a little differently, that assuming that the deal is getting through, if not today, tomorrow, the next thing that I think one will have to be extremely careful about is how exactly are you going to be positioning your investment in this quarter. See, the last quarter results have already given good amount of confidence about Indian corporate sector producing better numbers. However, in the first quarter, that is the current financial year, the first quarter, we are likely to see, I think, a severe amount of challenges in various companies and their books, etc. Those businesses which are dependent on global supply chain mechanism, the logistic management activity included, I think they are going to be having the first taste of challenge in this particular quarter with the kind of performance that they will be talking about. Already companies have started talking about pain in the high input cost, particularly the commodity prices, including the metal commodity, chemical commodity prices. So they already started talking about, I think, the adverse impact of that. And still the quarter is yet to get over, but at the same time, I think the businesses of the companies, if they are not meeting the kind of expected numbers, probably the market will not be very kind in tolerating the kind of valuation at which I think it has bounced back. So in my viewpoint, in summarization, I feel that I think today we stay in the range between 22,200, which is the low that it has made up till now, and 24,600, 24,800.
Okay.
In this range, market is tightly placed as I see it at this point.
Sure, of course, Devin bhai. Just want to go through what the details of that story is. And Pramit Pal Chaudhary, South Asia Practice Head for Eurasia Group, joining in. to give us the idea. Now, this is what is being claimed, and it is coming in from the White House. The White House believes it's getting close to an agreement with Iran on a one-page memorandum of understanding to end the war and set a framework for more detailed negotiations. They claim that this is the closest they've been to an agreement. So what are the provisions that we know of so far? The deal would involve Iran committing to a moratorium on nuclear enrichment, US agreeing to lift sanctions, release billions in frozen Iranian funds, and both sides lifting restrictions around transit through the Strait of Hormuz. We have to wait and see whether the Iranians respond to this, because we've seen versions of this coming in before. Pramit Pal Chaudhary, just want to ask you, of all of the things that this one-page memo reportedly has, do you think the Iranians will agree to not charging any levy through the Strait of Hormuz and leaving that unchecked? Because that is a strategic advantage they've gained as a result of this war.
So the most likely way that would be handled, the Iranians have already passed a law in their own parliament, in the Majlis, saying that they will have the right to impose such dues on any ship that goes in and out of the Straits of Hormuz, and they will share that right only with Oman, which controls the southern shore. So legally, there is no way back for the Iranians. But what can happen is either the Iranians can unofficially say, we won't impose such a due for an unspecified amount of time, calculating that when the Americans eventually pull away and this war comes to an end, they can impose that due anyway, and nobody will really be in a position to protest. Or they can wrap it in a different language. For example, the Iranians have also said they expect to be paid a war reparations for the damage that has been done to them during the war. And they could therefore theoretically put those dues under a war reparation structure, charging the countries like Qatar, Saudi Arabia, and UAE directly, and say you pay it to us in case your ships don't get. I will expect Iran to still demand some kind of money, but it can be wrapped up in a manner that is not of the same language that the Americans are saying. So the principle that the Straits of Hormuz remains open as an open international maritime corridor can be preserved.
Pramit, hi, Alex here. The other sticking point, and something that you've heard about in fits and starts from the Iran administration, I'm calling it the administration, but the spokespeople, shall we say, of Iran, is the nuclear deal and the lack thereof, and their unwillingness to surrender the enriched uranium that they have. So where do we go on that front? Because they seem to have been unwilling to budge on that point.
Well, what is interesting, if this one-page memorandum is anything to go by, the Americans have actually walked back from their original position. So the first issue was the enrichment question. America said, you must commit not to enrich uranium for 20 years. Iran had said, we are prepared to commit to 5 years, which is exactly what was under the original JCPOA agreement. In this memorandum, it seems the Americans have said, why don't we go for 12 years? At least 12 years, preferably 15. Obviously, Iran will probably go for the shorter number. But you're seeing the Americans effectively walk to a mid position between the 5 and the 20 years. And so I think that's something the Iranians can live with. Not least because, especially if this does not come with any monitoring system or verification structure, it after a few years, Iran can really do whatever it wants. So I think we're looking at a compromise in which 10 years perhaps is what the Iranians will offer. But the Americans have clearly walked back from that original 20 years by quite a bit.
Okay, just one more point, Pramit. The fact is that we're hearing only one side of this, and I want to make it clear to our viewers, this is an Axios report that the street is responding to. And Axios in its report is quoting officials from the White House. There is no official word from the White House yet. Having said that, there is no word at all from the Iranians. And this is what we've seen time and again, right? Bluster and sometimes claims from the American side, and then the Iranians come and say that there's no such thing. How do we know this is not just one of those times?
So what we're seeing, I think, is a very standard negotiating tactic. The Americans have basically positioned themselves by saying, okay, look, this is what we've sent an MOU to a memorandum of understanding to Iran. We know that we believe that the Iranian regime is divided between hardliners and pragmatists, so we don't know whether it will be accepted. But what we will do is also leak it to the press. So if the Iranians come back and say, no, this is unacceptable, or come back with a set of demands that of their own, which America finds unacceptable, America can at least go to the public, to their public and to the international community and say, look, we made major compromises. The people who are being difficult about this are the Iranians, not us. And that's basically what they're positioning themselves as. This is, as you said, this is not the way diplomacy is normally run. Normally, you try to get everything settled behind closed doors. But in this case, given that Iran and America, the distrust levels are so high, they do not have diplomatic relations. Iran will be nervous to send even a foreign minister to meet an American foreign minister for fear he'd be assassinated. Given the state of relationship between, this is basically how it's going to play out. And finally, you have a President Trump whose concept of diplomacy is, should we say, very different from what the norm is.
Yeah, different is one way to describe it. Thanks so much for taking the time, though, Pramit. Always a pleasure speaking with you.
Thank you.
All right, I want to go back to Deven Bhai on this. Deven, you were listening to this conversation, right? A geopolitical expert talking about it, and it seems like this is a move towards a deal, as you were pointing out. But the question is, what should your response be? And I asked that question to you at the start, but I want to refine that just a tad bit. You have crude sensitives. The top gainer on the Nifty 50 is Interglobe Aviation. It's up, 6% at this juncture. So the horse has already bolted. Is there any point jumping on it right now? You could well be in a situation where you're caught on the wrong foot.
Yeah, Alex, I think that's what the main point is, that we all believe that sooner or later, I think this situation is going to ease out, some agreement will take place, and I think the market will remain excited. I would like to believe that I think that excitement is not going to be permanent. It is going to be probably an event-driven excitement. The reason for which I think I'm saying this is because in this particular quarter, the reality check comes in. The corporate earnings are not going to be reflecting the kind of values that market is right now assigning to some of the stocks. And that's where we are going to see the challenge. Even if we want to believe that tomorrow onwards, everything will become normal, as far as I think the problem with the Iran and the other places is concerned, my still belief is that I think it's not going to get normal for the business. Business will take time. And that's where probably I would like to buy into this market during the correction. Having identified good opportunities and understanding the businesses at a right price, right time, I think one will like to buy. Now, the question will arise that I think we're going to sell at that point of time that you will buy. My take is that I think those who have actually bought it at a lower levels, they are right now also booking profits. So that is a good time to, I think, see the correction in the price. And that's where probably I think would like to buy some of the good quality stocks. Not in hurry at all, at least at this point of time, unless I think the stock is a compelling selective story.
Okay, Nilesh, I just want to understand from you, what is the Nifty position right now? Because if you think about it, this is what's been holding back, right? And having said that, we don't know if all of this changes because these things tend to change quickly. But as of now, as of the levels that you're seeing and the strength that you're seeing in the Nifty and Bank Nifty, please. You're on mute. Yeah, you're on mute. Yeah, there you are.
Right. So in last 6 to 8 consecutive sessions, we have seen some bit of profit taking that is coming back specifically in the second half of the session towards the closing hour. But today the case seems to be different. If Nifty manages to close about 24,300, that will be considered as a positive close. Then probably we can expect a short covering rally towards 24,500 to 24,600. These are the levels that we are expecting in the Nifty on immediate basis. So today's close, which probably we might see that closing about 24,300, and that will be considered as a positive close. And given the kind of a setup we are witnessing on India VIX, which has slipped below 17 after a long time, so that is also giving more confidence. And given the kind of derivative data we are witnessing, a lot of call writers were active at 24,300, and they might run for the cover now, and we may see a short covering move on the upside to continue. Now coming to the Bank Nifty, similar to the Nifty, it is important that it should close above 55,800. That's the 21-day moving average. And if it breaks above 56,000, that will be another confirmation that we'll be getting on the technical front. And target for the Bank Nifty now comes somewhere around 56,500 to 56,800. So the setup on the Bank Nifty also looks strong. And given the kind of outperformance we are witnessing today, we may see a huge amount of short covering in the banking space, specifically index derivative counters like HDFC, ICICI, and Axis Bank. So these are the three specific banks that we are keeping an eye on, and we remain bullish at current level in the Bank Nifty as well.
Okay. Picks that you would look at as this moves, how would you look at, say, an ONGC? How would you look at an Indigo? How would you look at an Asian Paint, some of those crude sensitives, Nilesh?
Well, Tamanna, as far as oil upstream companies are concerned, we have already seen a very good momentum in the stocks like ONGC, Oil India, and Coal India. But now I think we may see some bit of correction out there. The focus will be on crude sensitive stocks which might benefit from the falling crude oil prices. So first of all, Indigo, the setup has turned strongly positive after today's move, and we are expecting a follow-up on the upside to continue towards 4,700 to 4,800. So setup looks positive. If somebody is already holding the long position, can stay put, keeping a stop loss below 4,400. And major trend reversal can be seen across all OMC stocks. So specifically, Hindustan Petroleum is something that we are liking at current level as well. After a spurt of close to 7%, there is still upside room left towards 425 to 430 on the upside. So yes, all these stocks within OMC space, HPPP, ISC look strong. Keep an eye on aviation space, specifically Indigo. So these are the stocks that we remain positive for further momentum to continue.
Okay, David Roche, strategist at Quantum Strategy, joining us right now. David, thanks so much for taking the time. Markets in India and in fact across the globe reacting to this Axios report that is quoting a number of sources, some of them from the White House purportedly. And they're talking about the possibility of a one-page memo, a deal to be signed between Iran and the US. And some of those provisions talking about the easing of restrictions of travel between on that Strait of Hormuz. What do you make of this?
I respectfully say that this is a press media report, and I have the greatest respect from my colleagues in the media, but I don't have a lot to go on as regards any factual evidence for a deal. However, what I can do is tell you what I think this would mean if it were true. You cannot settle the conflict which President Trump has started in the Gulf with a one-page memo, because it will decide nothing and put all negotiations out in the future, which leaves us in a worse position than when he started this war. So any one-page memo which says Iran is going to do this or going to do that, and the Americans are going to go home, is effectively a defeat. It is nothing to celebrate. Why? Because what matters to you and me is whether oil moves. And a deal, a one-page deal where the Americans go home, will simply say that Iran remains in charge of the Gulf. And then at least 50% of the oil will not move, because Iran has plenty of enemies among the Gulf states and others, which it will prevent using the Gulf for shipping purposes. So it will not settle the problem economically for you and me, and therefore not for markets. So I would say to you, hold your fire. Don't get carried away by markets which were already so frothy and are now blowing even bigger bubbles, because any quick fix to the Gulf will actually be a quick defeat for Trump. And that will leave what matters to us, oil, in as much danger or more than before.
Not to be facetious, David. It depends.
You never are facetious.
It depends on the size of the text. You can probably fit quite a bit on a page. But having said that, the crude oil prices have come off quite substantially, and Brent crude at 102 or thereabouts, where a couple of days back it was much higher. It was 115 plus. The oil market's also taking notice, David, or would you say that this is simply paper crude and is not indicative of what the real situation is?
It's not indicative of the real situation. Brent is a paper transaction. It's an investor vehicle. If you go down and try and get immediate delivery of oil, whether it's 40s or Brent or whatever, you will find that you'll be paying 30 or 40% above these rates. And the reason for that is very simple. With the entire Middle East network for exporting oil, including the pipelines on the Red Sea, being closed down, we are short of 23 million barrels of oil a day. And that means that global inventories are falling. And people are scrambling in the countries where the inventories are reaching critical level, the EU, Australia, India. People are scrambling to get oil at any price. And that's the price that matters. So don't be distracted by what traders are doing in financial instruments about oil. Look at real-time deliveries.
David, so therefore, and you've identified, I think, very aptly to say that this is not going to be solved by a one-page memo. So therefore, from your perspective, there are a couple of sticking issues, right? You talk about nuclear enrichment, you talk about control of the Strait, and you talk about reparations that are being sought by Iran. From your perspective, what will be needed for a conclusive agreement to be signed?
Oh, I think the only conclusive agreement which the Iranians are prepared to sign, and after all, you have to say, what are the Iranians prepared to sign? With the IRGC hard line in control, the only conclusive agreement that they're prepared to sign is a withdrawal of the Americans, not only from the Gulf, but from the Gulf states and surrounding states, an acknowledgement that they are in charge of the Gulf, which they, by any international law, are not, and that they can charge what they like to let whom they like through the Gulf. That's the deal they'll sign. And it's not the deal which anybody in their right mind seeking to solve the problems that we are dealing with, which is whether oil will move or not oil, they could not possibly sign this. But that is not what it's about. You see, you're asking me who would sign a deal which settles the issue. And I will say they will sign a deal which does not settle the issue, because Trump wants out because people see his policies as a disaster and the midterms are coming up and he's prepared to get out at pretty well any price, I believe. And the Iranians want to keep the control which they've got, which is they lost the war, but they won the strategic battle for control over the world's oil supplies, the choke points, the Gulf of Hormuz, etc., and the Red Sea. And they're not going to give that up. Why would they give it up?
That was exactly my question. That was exactly my question. Why will they give that up? Why will you give up a strategic advantage that you've been handed? But then something's got to give, right? Otherwise, the blockade continues. David,
what they reckon they'll give is they reckon Donald Trump will give because he wants to go home. That's what they reckon. Now, whether they actually get to that point or not, we'll see. But why on earth would they give up? What has changed?
Yeah. David Roche, thank you so much for speaking with us. Just a quick question with Devin Bhai before we wrap up this segment. Devin Bhai, is there a strategic re-look at opportunities if this war is truly ending? Would you look at a portfolio reshuffle in earnest and some stocks which now set to benefit?
Tamanna, a lot depends on how exactly we see the commodity prices settling. Particularly, I am looking more at it because the India economy on a consumption side is a fantastic roadmap. So I think there is no second thought on that aspect. In fact, sooner the war-related uncertainties goes away, I think better it would be for the companies in particular, because I think they would be in a much better position to execute. The current challenge is related to the pricing pressure due to the commodity prices. And if those pressures, if that pressure is coming down, in some systematic manner, then probably I think market will look ahead with a larger amount of confidence. At the same time, I think some of the significantly subdued stocks like L&T, where probably we see the opportunities actually, I think, becoming bigger, but for this uncertainty at this point of time on execution, I believe that I think such kind of companies should be considered in the portfolio. Because I think when the tide turns for better, I get at this point of time, you are likely to see the better appreciation from some of these companies which are better down at this point of time.
Okay. Thank you so much, Devin Bhai and Nilesh, for speaking with us. David Roche, we'll take a very short break. We're coming back with a crude check. We're speaking to experts on crude. We're getting you BTST ideas. This is turning out to be an exciting Wednesday close. How should you make the most of it? Are you making sure you're not caught napping when this finally ends? Look at that spike on the Nifty. The broader market's showing even more strength. We're coming back with all of that in just a second. Don't go away.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Economy, business, world, technology. Noise filtered, numbers decoded. Inside.
Okay, it's becoming a wonderful Wednesday this close. Alex, how quickly things change also tells you how much pent up anxiety there is in the markets, and this is the one thing holding back, because it's not just the Nifty and the Sensex. You look at the rupee,
Yes.
you look at European markets, you look at American markets, you look at crude prices, you look at the VIX. All of those indicators telling you that a wall of worry might be fading and will drop quickly.
Yeah, absolutely. And the one asset class that you did not mention, Tamanna, but I think is going to be very critical to watch is bond yields.
Yes.
Because as of this morning, I was talking about it and it's been highlighted. In the UK, you have the 30-year yield that is at the highest level since 1998. You have in the US, the 30-year bond yield that is 15 basis points away from its 23-year highs. And in Japan, that's a similar situation, less than 15 basis points from all-time highs. So there is pressure because there is an anticipation that if this conflict is prolonged, there will clearly be a macro impact. But we've got Shivangi Sarda, analyst, equity derivatives and technical at Motilal Oswal, as well as Dharmesh Kant joining us on this leg. Thank you so much to the both of you for taking the time. Allow me, however, to go across first to Pankaj Srivastava. Okay, he'll join a bit. Okay, let me amend that. Let me go to you, Shivangi, then. On the charts, we've just gotten a check on the Nifty 50. I'm wondering whether your ranges have shifted based on the late rally that we've seen today.
Very good afternoon. Absolutely. It has been turning out to be a wonderful Wednesday close, of course. We've seen that index has rallied to the near resistance levels of 24,350 marks. And, the next up level that we're looking out for is 24,500. Of course, the support levels have shifted higher. Now we could look at 24,150 as an important base here. Of course, all the other, global tensions easing off and with the, domestic cues also indicating a good sign of buying, we would recommend a buy and decline here as well, even to continue at these levels. And we are seeing buying across the street, across sectors. So some of the good picks could be handpicked from here. Of course, talking about the bank Nifty here, we've seen that outperformance can be seen here today after a series of underperformance. And we've seen that now it is holding above 55,500 levels. So till the time it respects these levels, we could expect an up move towards 56,500 odd zones for Bank Nifty.
Okay, futures, S&P futures are up and about. I wonder if we can pull up the rupee. It's at its strongest point of the day. We'll pull up the rupee for you in a bit as well. You're seeing US futures doing very well, 94.62. So either you look at it at lowest point or highest point, but let me just put it this way, it's at its strongest point of the day at 94.61. Brent has cracked nicely, good for India. MCX Silver July futures are up as well. So it's looking good, almost a 7% downtick on Brent. Pankaj Srivastava, Senior Vice President at Rystad Energy, is joining in. Pankaj, I have a very simple question for you. The one thing that US President Donald Trump has been saying incessantly is that the moment this ends, oil prices will collapse. There will be this huge push down. Do you think that's likely to happen?
Yeah, the chances of that happening is quite high because the moment the Strait of Hormuz opens, we can expect the significant supply push coming from the Middle Eastern countries, and that is going to help the crude prices go down. Because one thing we also need to know that the refineries, at least in the Asia region, which has some of the refineries started utilizing their SPRs. And when the flow will start resuming, we will see that the pressure on the crude prices are going to come down. Another aspect is that is also we need to consider that because of the high prices currently being faced in the at least the Asia region, the demand destruction is happening, and that demand destruction is also going to help in reduction in the crude demand, and that is basically supply demand game is there, and then you will see the crude prices going to drop. And with the geopolitical conditions, but this is not going to happen immediately. It will take certain amount of time due to the normalization of the logistic through Strait of Hormuz, and then certain amount of infrastructure damage has already happened in Middle East. So the full capacity of the crude production coming to the pre-war level is going to take certain amount of time. So our expectation is that if we see a major peace accord happens within a couple of weeks or maybe by end of this month, the normalization process will start from mid of June, and the crude prices are going to be in the range of $80 to $85 by the end of this year. So that is our assumption based upon our internal analysis. And yes, you can see that this is the way Mr. Trump is talking about.
The contention, Pankaj, has been made that the levels that we're seeing for Brent is on paper, and the on-ground reality is very, very different. Availability of physical crude, the prices when transactions are actually taking place, and the movement of crude. So how do you study these two different markets, so to speak? They seem to be operating on completely different triggers.
Yeah, so Brent is, you can see the benchmark crude. So Brent crude production in reality is very, I would say, insignificant amount. So, and that depends upon for the different market. If you're talking about the Asian market will be more interested into the Dubai sort of the crude, that is the medium sour crude. And the European market, which used to rely on the Russian crude, they started processing significant amount of the WTI. So reality will be always be different than what the Brent prices are being shown. So if you see, as far as the India is concerned, our crude cost is significantly higher than what the Brent price is showing. So and the reason is that these are the benchmark crude, but they do not represent the real processing by the individual refineries. So they basically, you compare relative to these crude prices. But still, I feel, and then we whatever we have studied, the Middle Eastern supply is going to release, and then we have to also remember that UAE is coming out from the OPEC plus, and that is going to release another 1.5 million barrels of oil, and that oil will be mix of the sweet as well as the medium crude, so suiting to the Middle Eastern refineries.
Sure.
And then whatever we anticipate based upon the current situation, some more countries are also going to come out from the OPEC,
Yeah.
and that those exits will basically loosen the grip of the OPEC on the overall food market supply situation,
Yeah.
and then more supply is going to come up, and then you will see the crude prices are going to fall down.
It's actually a
And
pretty...
that is going to happen. So
by
Kazakhstan,
2027.
our expectation
Yeah,
is Kazakhstan is
absolutely
the next one.
Absolutely, Pankaj. We're seeing a fundamental shift in the way that crude will be priced, but the conflict needs to end first for that to pan out. Thanks so much for taking the time. A pleasure having you. Right, let's go across now to my colleague Somit Sarkar, because I'm very certain that there's a lot of buzz in the dealing rooms and he's pretty sure to have gotten some interesting updates for you. Somit, good afternoon. What are you picking up?
Well, few stocks that dealers have highlighted in trade. Firstly, it's Ola Electric. Dealers indicate that the company will be launching its QIP very soon. They have already completed the roadshows and they will be taking analysts and investors for a plant visit this week. So most likely by next week, they might launch their QIPs, what dealers are indicating. Then Yes Bank is another counter. That stock has been buzzing in trade. There are buy flows on the large HNI desk. Dealers are expecting a positive news flow very soon on this counter. For Coforge, that stock has been on a gaining trend, and this is largely in the back of strong set of numbers. But what dealers have indicated is that in and the higher point in trade today, there was a domestic mutual fund who was a seller in this counter. Just keep an eye out for Coforge as well. For Hindustan Zinc, multiple dealing rooms have recommended buy calls to their clients based on technical charts. The stock is up nearly 4% in trade. And lastly, it's PB Fintech and LIC Housing Finance. There are buy flows on PMS desk. Dealers are expecting strong Q4 numbers from both the names. For LIC Housing, they have specifically said that there could be a valuation catch-up as well that could happen post numbers. So keep an eye out for LIC Housing as well in trade.
So I mean, just very quickly, any buzz you're picking up about this possibility of a peace deal, or people are just on wait and watch mode?
Sorry, I could not.
The peace deal, the US-Iran peace deal, is that causing some excitement in dealer rooms, or people are wait and watch mode?
Yes, there is some excitement that has come in. In fact, if you look at market, Nifty has also broken above the 24,300 level, but I don't think there would be too much buying that would come in at this moment, because this is something that we have heard. This is something that we have heard earlier as well, that they are very near to filing. They are very near to signing a peace deal, and then nothing has gone through. So market would remain cautious at this point of time.
I
is
agree.
What dealers are indicating.
I agree. We've heard this song before, that there's almost a peace deal happening, but then does it really happen or not becomes the question. Dharmesh Kant, would you also wait and watch? Because here is where FOMO comes in. You have about 10 minutes to go for markets to close, and you don't want to be caught on the wrong side of this rally.
I mean, the FOMO may be valid as well, because Tamanna, one thing is very clear: the market has rallied 2,000 points from the lows on the hope and anticipation that this deal will happen. When it will happen, it has not happened till now. But since it's coming from the third party, it's not coming from Mr. Trump, so the faith is all the more there. To my mind, I think that something must be there in next 48 hours, as has been indicated. And I mean, we are going with a buy on this kind of a scenario, because earlier, any fall in the market in last 4 or 5 days, if you've noticed on a technical ground, it has been bought into quite decisively. So that gives further more confidence. And I think the sectors where the impact was most, maybe the financials came out with a very strong set of numbers, including banks. They should be the first beneficiary out there. For example, Axis Bank, they provided 2,000 crores as a provisioning for this event. That all will be reversed. So though profitability will be far higher. Automobiles as a space have reported good set of numbers. We should be looking onto them, because input price pressure, which was earlier, thought of or being scared of, goes away. At the same time, all the infra plays, L&T is a very good buy. No harm in taking a chance here because these are fundamentally good, stories in the building, good numbers, good order books. I think you should be taking a chance by buying this market at current levels.
Hey, all right, quite a strong statement coming through. You know, the nature of the news wheel is that the breaking news takes precedence. But having said that, one of the biggest stories of the week has to be the victory of Talapati Vijay in the assembly elections in Tamil Nadu. He came out of left field, some might say. Wasn't expected to win, but he has managed to clinch that maximum there, or rather, at least the amount that he did. The question is, a lot of people have is, how much money does he have? What are his assets? How much wealth does he have? And usually, this gets disclosed ahead of an election season. And we have those details for you. In fact, my colleague Nimit is joining in, not just with a breakdown of those assets, but possibly a few break-dance steps as well.
Absolutely, Alex. I've been preparing for this my whole life, but I'm pretty sure that Talapati Vijay is walking to the governor's office like this. From his master movie, which everybody knows about. He is the master now of Tamil Nadu, as we can see. But now we'll discuss how much he really makes. And it's going to shock you because everyone thought a lot of money can be made from movies in Bollywood. But going down south, we can see that Vijay Talapati has built himself quite an empire. Now, if we look firstly at his overall assets, his declared assets, which come from the Election Commission of India before you file to participate in an election, is at 648 crores with a liability of about 7.64 crores. That comes to about 641.22 crores, quite a substantial sum, I would say. And now this consists of both movable and immovable assets. First, let's talk about his cash, which of course, he's 51 years old, but quite Gen Z in that respect, where he doesn't really have a lot of cash declared. It's 1.1 lakh and his spouse is at 1 lakh. So that's 2 lakh in cash, but that's only not even the tip of the iceberg really. Movable assets at 426 crores. The movable assets include stocks, bonds, banks, FDs, all of that. We're going to dive into that in a bit. And its immovable assets include 20 large immovable commercial and residential assets at 222 crores. That brings up the 640 crore mark. Now let's dive into his movable deposits, right? Big deposit heavy guy he is, not big on stocks, and we'll see that a little later, but really big on the banks and the deposits, old school, I would say, at 333 crores of